Hello everyone, how are you all? Yes, it's that time of the year again where the examination is over and we are going to review? No. Analyze? No. Discuss the solutions in detail for the examination, what you all saw in the examination hall. But I am at my comfort sitting in a classroom with AC on, with my water bottle next to me with no pressure of time solving this. So, I would be very comfortable solving this, and I would keep that in mind that you are not really comfortable solving this paper in the examination hall. This is not going to be a review or an analysis of your paper of counting in the exam. This is going to be a detailed solution video. So this will not just help those students who already wrote the examination to know what is the correct answer, how many marks are they going to get, will they pass this exam, can they start preparing for inter, or are they going to fail? Should they start preparing for foundation again before results? It is not just to help that category of students, but this is also to help those students who are going to write their examination in January 26, May 26, September 26 and onwards, so that we all know what is the clear message from ICAI. Before the examination of September 2025, there were a lot of buzz around the market, in the market. Everyone saying expected questions, important questions, ABC analysis. In depreciation, you should be very clear with WDV and SLM. ICAI told, take it. Some of your digits method. People told there's been only one instance where disposal method is asked, so it's rarely asked. Category C, not important. Take it. Right, disposal method. BRS is usually question number 3 or 4. Take it. They've changed the question number. BRS, it will be usually simple question. No, they made it a complicated one with amended cash book. And purchase book and this subsidiary books kind of questions are less important or not important, like usual. I think maybe the pattern is there of one question from subsidiary books that did come. But lot of parts of this question paper were quite unique from the usual trend. They broke the trend. They gave it differently. They made it slightly more spiced up. And I call this paper, like I told you some time ago, it's not difficult, but it's a quite unique paper. A wake up call for all of us to get away from this expected question, paper trend analysis, ABC analysis, and do the syllabus 100%. Be ready for anything that can come your way from the entire syllabus. And hug your question paper in the examination and let it, take you forward to enter on the result day. So why waste time? Let's begin the analysis of the solutions. Sorry, detailed discussion of the solutions. So let's begin with question number 1A, which is on true or false. We need to tell whether the statement given is true or false with reasons. Like usual, same 6 sub questions, 2 marks each, 12 marks. Let's begin. Materiality depends only upon the amount. They made a very harsh statement, and not upon the size of the business, nature and level of information. They made it quite easy, giving you both sides of this coin. So the answer is false. Materiality does not only depend upon the amount, it also depends upon the size of the business. It also depends upon the nature of the information and level of information. To tell in short, this one is from the accounting concepts. Materiality basically means any item which can impact the decision making of the user is material. If it does not affect the decision making of the user, it is immaterial. A piece of information, if available to the user, if is going to take this decision, and if that same information is not given, then you might not have taken this decision, you might have taken that decision. That change in the decision making that happens is because of this vital piece of information. That vital piece of information which can make a person take decision is material, and the answer to this is false. Materiality doesn't only depend upon the amount, it depends upon business, size, nature, level, and several other aspects. You can see materiality doesn't depend only on the amount, it depends upon the size, nature, and level, and if it affects the decision making of the user, then it is material. See the next one. While preparing income and expenditure account as per accrual system. Oh, this one is on not for profit organization. The income and expenditure is considered in the period in which actual receipts and actual payments are made. Wrong. Actual receipts and actual payments are recorded in receipts and payment account. Income and expenditure account, which is prepared on accrual system, we record an income, we record an expense in the year in which it is incurred, expense in the year in which it is incurred, income in the year in which it is earned, irrespective of the fact whether it is received or not. I've earned interest income. I've not yet received it. I'll still write it in my income and expenditure as income, though it is not received. If it is received, it will be receipt. If it is not received, it will become accrued interest income. Expense. I've incurred some expense by way of rent. Whether I pay it or I don't pay it, it will still appear in my income and expenditure side. If I pay, it is payment on receipts and payment. If I don't pay, it will be outstanding rental expense, a liability in the balance sheet. So again, this statement is false. See, false. In preparation of income and expenditure, expenses and incomes are recorded when they are incurred. Expense when it is incurred, and income when it is earned. Receipts and payment account will include actual receipts and actual payments. I hope you got this. Then let's go to third one. Profit sharing ratio. This is on partnership. And capital contribution ratio need not be same. Yeah, true. Capital ratio is very distinct from profit sharing ratio. In fact, in the absence of partnership deed, as per section 13 of Partnership Act 1932, we will assume the profit sharing to be equal irrespective of capital. Let's say I and you enter into partnership. I contribute 2 lakhs, you contribute 1 lakh. If we don't have partnership deed, we have to end up sharing the profits equally. Can I say my capital is 2 times yours? We need to share the profit in 2:1 ratio? I can. To do that, we both have to enter into one partnership deed, and I would have to mention. Only if mentioned, the profit sharing ratio can be in the capital ratio, but there is no condition that the profit sharing ratio should be capital ratio. There is no such condition. Can be, there's nothing like should be. So they're telling profit sharing ratio and capital contribution ratio need not be same. The answer is true. They can be different. They can be same, but they need not be same. Then let's go to fourth one. Depreciation is not provided in financial year when the entity incurs loss. See, depreciation is an above line item. If you draw a line between P&L and P&L appropriation, that comes above the line. Basically, depreciation comes in P&L account. Depreciation is a compulsory expenditure. As per Income Tax Act section 32 also it's compulsory. As per accounting standards also it is compulsory. You have to always provide depreciation. Sir, what if the entity is in loss? You will get to know whether there is profit or loss after you prepare PL. In preparation of PL, you have to write depreciation. Depreciation is charge against income. Only after we provide for depreciation, we get to know profit or loss. First charge depreciation, then you get to know profit. So in short, the answer is false. You need to provide depreciation irrespective of the profitability of the company because it is charge against income. Fourth one, false. Depreciation is charge against profit or income to be charged to P&L. So it is to be charged irrespective of the fact whether the entity is profit making or not. Then let's see the fifth one. The concept that helps in keeping business affairs free from the influence of personal affairs. This is again based on accounting concept. This is business entity concept. So an entity is different from its proprietor. Business is distinct from its owner. So we need to maintain books of accounts to ensure that personal affairs are different from business affairs. They're telling this is known as matching concept. Everything is correct. The last word is wrong. This is known as business entity concept, not matching concept. So then what is matching concept? Matching concept says that we need to match our current year expenses with the current year income to find current year profit or current year loss. If I want to find current year profit, I need to match all my incomes of current year with all my expense of current year, irrespective of the fact whether that expense is paid or not, irrespective of the fact whether that income is received or not. In fact, matching concept is the basis for your accrual and periodicity. They're all connected. So definition is correct, but it's not for matching. So the answer is false. So it is business entity concept that requires us to maintain books of accounts of the entity and distinguishing it from that of entity and proprietor. And matching current year profits with current year expense with current year income to find current year profit or loss is what's given under matching concept. Okay, sorry, have they told matching? Matching. I, by mistake type money measurement. Matching. Matching concept requires matching current year expense with current year income to find current year profit or loss. Let's see the next one. A company cannot issue equity shares at discount to general public. Part of introduction to company accounts. Yeah, to general public, company cannot issue at shares at discount. Section 53 of Companies Act 2013 forbids issue of shares at discount. So Is it like issue of shares can never be made at discount? No, reissue of forfeited shares can be made at discount. And if in case you are giving sweat equity shares as per section 54, then you are allowed to issue them at discount. So that is to employees, that is not to general public. General public are not your employees. People who are working for you are your employees. So to employees, you can issue shares at discount, and reissue of forfeited shares can be made at discount, but that's usually considered as sale. That's not considered as issue. So the answer to this statement is true. The general public company cannot issue shares at discount. See, issue of shares at discount is forbidden under section 53 of Companies Act 2013. However, reissue of forfeited shares at discount and sweat equity shares can also be issued at discount. Then we have 1B, which is again a theory question for 4 marks. Cute, sweet little question. This question is very easy. You might have cracked this. This part of your chapter 1 theoretical framework. I'll tell you what irritated lot of students from what I heard. See, if they would have just given valuation principles, a lot of them would have got it right. By just adding the word generally accepted, a lot of them messed up writing generally accepted valuation principles to generally accepted accounting policies. Generally accepted accounting policies gap is different from generally accepted valuation principles. Valuation principle means what? There is an item. You need to write it in your books of accounts. To write an item in books of accounts, you need to give it some number. For example, I bought a laptop, I bought a plant and machinery, I bought a piece of land, I bought some inventory. To write it in my books of accounts, money measurement concept requires me to measure it in terms of money. So what are the various ways or principles based on which I can find its value? That's valuation principles. Let's say, for example, I bought this water bottle by paying rupees 100. So 100 rupees what I paid is the historical cost. First valuation principle. Next one, I bought this for 100, but I don't remember 100 now. So what will I do? I'll use replacement price. Meaning, if I forget or if I lose this bottle and I have to find another new bottle, the new bottle in the market is 110. Because I don't know the historical cost. 110, the replacement price of this bottle will become the best estimate. I can record this in my balance sheet at 110. The first one is historical cost. Historical cost is money that I paid when I bought this long ago. Second one is replacement price. If in case this is lost and I have to buy a new one, how much should I pay for the new one? And then we have something called as realizable value. If in case I'm selling this today to somebody, someone is willing to pay 40 rupees. That 40 rupees will become realizable value. So I'll repeat all three. When I buy what I paid, historical cost. If I have to buy today, what I should pay, what is a replacement price. If I sell today, what will I get? Realizable value. Lastly, present value. What is present value? In the future, using this bottle, what am I going to earn? Let's say I'll give this on rent and I'll earn rental income. So the future rental income, what I will get because of the bottle, if I discount it to today's date, so the present value of the future cash flows from this asset is called as present value. So there are 4 generally accepted valuation principles. Number 1, historical cost. Historical cost is the amount paid when we bought it. Replacement price. Replacement price is the amount that I would have to pay to buy the new one today. Realizable value is the money that I get if I sell it. Present value is discounted cash flows from the future of this asset, or the cash flows from this asset in the future discounted to today's date. Future earnings of the asset recorded as of today's value. That's present value. And this is solution to question 1A and 1B. That's another 4 marks. Now let's see question 1C. 1C is from subsidiary books, and this question they wanted us to prepare purchase book. Before we get started with the solution to this question, I want you to remember 2 golden points on purchase book. To record a transaction in purchase book, it has to go through 2 checks. Number 1, it should be credit purchase. It cannot be purchase of goods for cash. It cannot be cash purchase. It has to be credit purchase. Number 2, it has to be goods. Number 1, it has to be credit. Number 2, it has to be goods. If I purchase goods for cash, we won't record. If you purchase asset for credit, we won't record. It has to be purchase of goods on credit, and that's when we'll enter it in our purchase book. Can we begin? The first transaction that I have is on 2nd of December. Purchase from Gupta and company on credit. plates and bowls. Maybe we are into kitchen cutlery and crockery. I purchased 100 plates at rupees 150 per plate. I purchased 500 small bowls at rupees 50 per bowl. There is discount of 10%. Packaging charges of rupees 2 per plate and 1 per bowl. Okay, do 100 into 150, 500 into 50, add them and deduct 10% trade discount. And after that, packaging charges also will be included in the cost of inventory. So it will be part of our purchase. I'll write number of plates into 2 rupees, number of bowls into 1 rupee as my packaging charge. That's right. So I would write on this is all happening in the month of December. 2nd of December, purchase from Messrs. Gupta and Company. What did I buy? 100 plates. 100 plates into 150 per plate, 15,000. I bought 500 small bowls. 500 small bowls into 50 per bowl, 25,000. And if I add them, I would get 40. From this, I'll deduct trade discount of 10%. 10% of 40. That would come to 4,000. So 40 minus 4, 36,000 is the amount that I would have to pay for the plates and bowls I bought. But I would have to also pay them the packaging charges. So I'll add packaging charges. Packaging charges of 2 rupees per plate. So 100 plates into 2 rupees. That will come to 200. And on bowls, I'm paying 1 rupee. 1 rupee per bowl into 500 small bowls. 500. Add them all together, you get 36,700 to be the cost of purchase from Messrs. Gupta and Company. Done with the first transaction. Then we'll go to next one. 6th of December 2024. Purchased furniture. Okay. The moment we purchase furniture, remember it's a red flag. This is not purchase of inventory. This is not purchase of goods. This is purchase of asset. So this, though it is on credit, it would not come in our purchase book. Maybe I would have to enter this in my journal proper. So this is not a transaction against inventory. Transaction is not to be recorded as it is asset purchased and not inventory. Then let's go to 8th of December transaction. What's happening on 8th of December 2024? Purchased on credit. Very good. From Messrs. Ajanta and Company. So credit, one checkbox tick. Next I would have to check, is it crockery, cutlery and kitchen utensils? Yes, spoon and fork. How many spoons? 50 boxes of spoons at rupees 200 per box. 40 boxes of forks. Oops. 40 boxes of forks at rupees 250 per box. So take 50 into 200, 40 into 250. From the total, I would have to deduct 8% as trade discount. I'll do that. So come on, let's do. This transaction is happening on 8th of December from Messrs. Ajanta and Company. 50 boxes of spoon into 200 per box. That comes to 10,000. And 40 boxes of forks into 250 per box. That comes to 10,000. 20. I deduct trade discount at 8%. Am I right? 8% of 20 is 1,600. Once I deduct that, I will get 18,400 as the purchase price of my inventory. Got the 8th December transaction. Then let's go to 15th December. Purchased but for cash. Red flag. It might be inventory, but it is bought for cash. So this will appear in your cash book as payment. It won't appear in our purchase book. Like I mentioned, to record a transaction in purchase book, it has to be inventory. It has to be on credit. 27th December. What's the transaction on 27th December? Purchased 1 dozen cookers at rupees 750 each from Mrs. Verma on credit. Okay, I would write 15th of what to say, December transaction. We would not write it. What is the reason why we won't write it? Purchased for cash. So transaction is not to be recorded as it is inventory purchased but for cash, or inventory purchased for cash. Because it is inventory purchased for cash, we are not going to record it as a part of our purchase. I hope you all understood the 15th one. Then 27th one, purchased 1 dozen cookers. So let's write it. 27th, purchased 1 dozen cookers from Mrs. Verma. So when they say 750, there is a small confusion here. Is it 750 for 1 dozen, or is it 750 for 1 cooker? They just mentioned the word each. What does each represent here? Dozen or cooker? See, I don't know what institute is trying to tell with this, but I know how much a cooker costs. I don't really think you will get 12 cookers for 750 rupees. I think the pricing what they've kept for spoons, fork, plate, bowl and all, if you keep that in mind, cooker can't be cheaper than that. If you are going to get 1 dozen, meaning 12 cookers for 750, that will be those cookers what kids used to play. Like 3 or 4 year old kids have this kitchen setup where they act like they're cooking something. That cooker, you get 12 of those cookers for 750. But otherwise, a normal one, each cooker will cost 750. So I'm going by my common sense and practical skill. And I also know 1 dozen is 12 units. So we purchased 1 dozen. 1 dozen into 12 cookers per dozen into 750. And this is purchased on credit. And this is part of our kitchen utensils and our inventory. 9,000 will be part of my inventory. They have not given anything relating to trade discount and it's on credit. And 27th December transaction done. What else do I have? That's it. So once I write this, if I take the total, 4 marks have been pocketed. 36,700 plus 18,400 plus 9,000. Total is not mandatory, but it's good to write. 64,100 will end up becoming your total purchases to be recorded in our purchase book and later posted to our purchase account. Let's now start with solution to question 2A of our September 25 paper. This question 2A is on the topic of depreciation, one that took a lot of students off the hook and one that troubled a lot of them. I think many of them would have skipped this. I think that was a good deal to skip because the amount of computation that they should do on working, you should do know. 8 marks is too less. I'm not telling this is difficult, but I truly believe too much to do for 8 marks. That much to agree. And it's not the first time they've asked a question like this that's based on disposal based accounting. It's been asked in the past, but what's making this question stand out from the previous time they've asked this question is instead of asking WDV method, they've asked you to do sum of year digits method. That's the only difference. Otherwise, that's not much of a thing. Yeah, there's one more last thing. There is change in the useful life of the asset, changing the method of depreciation from sum of year digits to SLM. I really loved the question personally. No comments on how you felt in the exam. I understand. Would have been taken little bit by surprise by looking at a question like this. But with good presence of mind, very comfortably doable question. If you expect to do this question in 16 minutes, 15 minutes, I agree it's not possible. But we can take 20-25, very easily doable. Let me start solving this question. From the following details of machinery held by a firm, M1, M2, M3, three machines details have been given. They've given the date on which we purchased this, the purchase value, useful life as well as scrap value. The firm uses sum of year digits method to charge depreciation and maintains a separate account for it. Very good. So basically they want us to do disposal based accounting. They want us to do depreciation account separate and provision for depreciation account separate. Come to the end, prepare machinery account, provision for depreciation account, machinery disposal account, which is to be prepared for the year ending 24 and year ending 25. So we should do 23, 24, 24, 25. Only 2 years are relevant. 2023, 24, 2024, 25. Fine. And this is the interesting piece of information. Observe this. 1st of April 2024, machine 1 became obsolete and it is disposed. On the same date, estimated useful life of M2 machine is reassessed to be 3 years. So it was much more than 3. Now it is reassessed to be 3 and 10,000 scrap value. So we will change the method of depreciation also there for this machinery too. I am eager to see how the institute will give when their suggested answers are printed, because I believe by the language of the question, the method of depreciation will change from sum of year digits to straight line. If in case they will continue to do sum of year digits method, reassess the value and then do, then the answer will be slightly different. However, that's my disclaimer because I'm solving this much before suggested answers are actually released by the institute. Fine, let's begin solving this. We'll do one cute working note before we go. But what is being asked is machinery account, provision for depreciation account, and disposal account. But I won't be able to solve them straight. I'll do detailed working notes. Only then I'll go to that. And to recall, how do we compute depreciation under sum of year digits method? We'll take cost minus scrap value, multiply that with remaining useful life at the beginning of the year divided by sum of year digits. Sum of year digits is n plus 1 into n divided by 2. N plus 1 into n only. What is n? N is useful life in years. That's the way to go. Machinery number 1. 1/4/2020 is when I bought it. Okay. 2021 is our first year. And they've told useful life then is 8 years. Can I say at the beginning it was 8 years of useful life and the asset was bought for 11 lakh, scrap value is 20. So how do I find depreciation under sum of year digits method? 11 lakh minus 20,000 into 8 by sum of year digits. Sum of year digits, like I mentioned, is n plus 1 into n divided by 2, n plus 1 into n, that is n into n plus 1, whatever. 8 into 8 plus 1 divided by 2. 8 plus 1, 9. And 9 8s are 72. 72 divided by 2, 36. So 36 will become denominator. If I have to find depreciation for 2021, I would have to do 11 lakh rupees minus 20,000, that is 10 lakh 80, multiplied by 8 divided by 36. I have to do 11 lakh minus 20 into 8 by 36, which comes to 2 lakh 40. And if I have to do second year depreciation at the beginning of the year 2021, that is as on 1/4/2021, remaining useful life will be 7 years. So I have to do depreciation as 11 lakh minus 20 into 7 by 36, which will give us 2 lakh 10. And I should continue to do this because I'm doing ledger for year 23 24 and 24 25. So I need it till 31st of March 25. Next year 2022-23 will be, the remaining useful life will be 6 years. So I should do 11 lakh minus 20,000 into 6 by 36, which will be 1 lakh 80. So the successive years depreciation difference will be same in sum of year digits. If you would have found it for first year, second year, third year, fourth year, depreciation would have become simpler. So I would take this courage to say sum of year digits method depreciation is much easier than WDV depreciation. But it is slightly unexpected from your end to see this question in the exam, so you would have found it difficult. Otherwise, this is easier. See, year 1 to year 2, 30,000 difference. Year 2 to year 3 difference is again 30. And next year, I don't even have to do computation. Do 180 minus 30. 150 will be depreciation. So easier. Under WDV, you would have to write opening, depreciation, closing, on the closing, percentage. Woo. But anyways, what's done is done. 11 lakh minus 20 into 5 by 36, and 24 25 is also needed. The reason is very simple, because we need to prepare ledger for year 23 24 and 24 25. Here the remaining useful life will be 4. 11 lakh minus 20 into 4 by 36, that's 1 lakh 20. So these are the depreciations, but what's relevant to me is only these two. But because we are doing some of the provision for depreciation method, I would need all of this also. Okay, then I'll prepare ledger and I'll write the opening balance and I'll show you what is the impact of this. Now when I'm preparing ledger, or I'll do one more detailed working note. Let's go with this. 1/4/2020, I purchased machinery 1 for 11 lakh. I have depreciated it on 31st of March 2021 for 2 lakh 40. So I would depreciate for 2 lakh 40. Then I would get the closing balance as 8 lakh 60. Then again I would charge depreciation. After 2 lakh 40, I'll depreciate for 2 lakh 10. I would depreciate for 2 lakh 10. Then I'll get the value as 6 lakh 50. Again this year I would depreciate it. There is removal of this asset. Okay, M1 gets removed as on 1st of April 24. Oh, 1st of April 24. So no problem. So I would depreciate this on 31st of March 23. 31st of March 23, I'll depreciate it by 1 lakh 80. I would depreciate it by 1 lakh 80. If you want, I can show the computation here as well. Same thing what we discussed then. And once I depreciate this, I get the value as 4 lakh 70. Again, I'll depreciate it on 31st of March 2024. For year 24, it's 1 lakh 50. I would write 1 lakh 50 as depreciation, arriving at the balance of 3 lakh 20. And on this year, 1st of April 2024, I don't need this 1 lakh 20. Why? Because at the beginning of 1st of April 2024, this machine gets disposed, removed. So basically, if in case it was not disposed, I would have written depreciation here. But because it's disposed, I write no depreciation. It will get removed. And this asset will get removed at the value of 3 lakh 20, basically making it 0. 3 lakh 20 is its WDV. I want its original cost and accumulated depreciation, but we'll do it as a separate note. I hope you all got this. Then let's go to machinery 2. I'll fill the machinery 2 column, machinery 3 column. I'll have total amounts. Then I'll start with my ledger. Then ledger is very easy, just dumping the data. Come to machinery 2. Machinery 2 was bought on 1/4/2022. I would write 1/4/2022 is first year is 22-23, and its useful life is 8 years. So first year beginning, the remaining useful life is 8. And how do I compute my depreciation? 9,40,000 is the purchase price or original cost, 40,000 scrap value. From 9,40,000 I deduct 40 to get 9 lakh. 9 lakh will be multiplied by 8 remaining useful life at the beginning. And I would have to do the same thing. Yeah, 8 plus 1 into 8 divided by 2, which comes to same 36. So I would have to do what is the cost? 940 minus 40 into 8 by 36, which gives me 2 lakh as depreciation for year 1. And 23, 24. 1 second. Is this all right? 9,40,000 minus 40 into 8 by 36. Perfect. So in year 2, the remaining useful life will be 7. Then the depreciation is computed as 9,40,000 minus 40 into 7 by 36, which gives me 1,75,000. Here the difference is 25. And I don't have to tell you, next year when the remaining useful life is 6, it will be 2 lakh and 1,75,000 difference of 25. If I deduct from 1,75,000, I get 1,50,000. But you can check 9,40,000 minus 40 into 6 by 36. This is depreciation for M2. I've done it only till 25. I can do it for 26, 25, 26, 26, 27, but not needed. We're doing ledger only for these 2 years. When did I buy? 1st of April 22. So in my big working note, 1st of April 22, I would write purchase of a machine for 9,40,000. And how much depreciation for first year? 2 lakh, 1,75,000, 1,50,000. Here I'll depreciate by 2 lakh, it will become 7,40,000. I'll depreciate by 1,75,000. If you want, I can write the computation. Then I'll get 5,65,000. Then at the end of there, I'll depreciate this by 1,85,000. Is that right? Sorry, it's 1,50,000 here. Oh, this depreciation is changing in year 2024-25. M2, see, the date when we remove M1, M2's remaining useful life is reassessed to be 3 years with 10,000 scrap. So what I would do is, this final year depreciation is not provided on M1. Why is it not provided on M1? Because this asset gets disposed on 1/4/2024. And M2, this final year depreciation won't happen. Why? Because the basis is only changed. See, the asset was originally bought for 9,40,000, and in year 22-23 and 23-24 have depreciated it by 2 lakh and 1,75,000. Can I say 3,75,000 is already depreciated? So written down value of this will be 940 minus 375, 5,65,000. Now 5,65,000 of the WDV has to be depreciated over the next 3 years after deducting 10,000 scrap value. Switch to SLM. Very simple. Revised scrap value 10 and revised useful life 3. Can I say the depreciation to be charged anymore will be 5,65,000 minus 10,000 divided by 3 years. This change in the scrap value and this change in the change in the useful life is change in accounting estimate to be given prospective effect. From now, we don't have to change what has happened in the past. And depreciation method is also an accounting estimate, which is based on the useful life and scrap value and pattern of usage. If those change, method of depreciation will automatically change, and it is allowed to be changed. And that change in method of depreciation also should be given only prospective effect, meaning we should change it from now. We don't have to change the past. So can I say depreciation will be 5,65,000 minus 10,000 into 1 by 3, which comes to 1,85,000. So in the last year 24-25, depreciation that I would have to provide on M2 will be 1,85,000. I hope everyone got this. So please do 5,65,000 minus 1,85,000. The value of the asset will be 3,80,000. It's absolutely fine. Correct. Then let's go to M3. M3 was bought on 1/4/2024. It was purchased at 8,10,000, but there is no scrap value. And its useful life is 5 years. Okay. Now when I do M3's table for M3, at the beginning 2024-25, the remaining useful life will be 5 years. There is no scrap value. I'll do 5 plus 1 into 5 divided by 2. 5 plus 1 6, 6 5s are 30, 30 by 2 is 15. So if I have to find depreciation, I would have to do 8,10,000 minus 0, which is 8,10,000 into 5 by 15. which gives me 2,70,000 as depreciation. That's it. I don't have to do for 25, 26 because they've asked ledger only for 23, 24 and 24, 25. So I would write this 2,70,000 here. So I purchased the asset on 1st of April 2024, M3 for 8 lakh 10. On 31st of March, I'll depreciate it by 2 lakh 70 and 810 minus 270, I have 5 lakh 40 left. So I have the table ready. I just have to take the totals of this M1, M2, M3 column and write here. Look at the total, write machinery account, provision for depreciation account and disposal account. If in case you knew the flow of the problem, this was doable within the time also. Now 2 lakh 40 I would write here, then I would get 8 lakh 60, 2 lakh 10, 6 lakh 50 and 9 lakh 40. Now the depreciation will be 180 plus 2 lakh, 3 lakh 80 here. And if I deduct, I get 1 lakh 10 and depreciation here 150 plus 175 which is 325. 1210 minus 325 is 885 which is 565 plus 320 also. Disposal 320 I'll deduct and 8 lakh 10 purchase I'll add minus 270 and minus 185 455 and if I deduct I would get 920. That would be the written down value as on 1st of April 2025, which can also be found as 540 plus 380. Anyways, we have the entire working note ready. Now let's start with the ledger. Ledger is to be done only for these 2 years 23, 24 and 24, 25. These are the 2 years for which I want to prepare my ledger. Fine, let's begin. To begin with, I would write in my machinery account on 1st of April 2023 balance brought down. I have 3 machines, machine 1, machine 2, machine 3. I won't write them at WDV because machinery account is at OG or OC, original cost. So what is original cost? Original cost is same here, 11, 940 and 810. I would write 11 lakh, 9 lakh 40 and 8 lakh 10,000. Putting them together it is 28 lakh 50. And machinery 1 gets removed. Machinery 2 gets reassessed. That's happening in 1st of April 2024. So basically in this year there is nothing happening. Same to same whatever I have in machinery will become balance carried out. But I won't finish one ledger and then go to the other. I will go in the order of events. Now 1st of April 2023 I have written these 3 as opening balance. But if you observe our working note, 1st of April 2023 opening is 12 lakh 10. But I wrote 11 lakh and 9 lakh 40. And yeah, that's it. 11 lakh and 9 lakh 40, no? Is that what I wrote? Oh, no. 1st of April 2023. 1st of April 2023. Oops. I should have not written machinery 3 because machinery 3 was bought later. So I cannot write machinery 3 here. I hope I'm right. 1st of April 2023. 1st of April 2023. I have machinery 1, machinery 2. Machinery 3 comes only in the next year. Okay, that's not written. Now it's correct. And the same thing will appear as my closing balance on the credit side. Now, next ledger. In the provision for depreciation ledger, on 1st of April 2023, I need to bring down the accumulated depreciation on machinery 1, machinery 2. Machinery 3 is not there anyways. How much is the depreciation already charged on machinery 1, already charged on machinery 2? On machinery 1, we've already charged 2 lakh 40, 2 lakh 10 and 1 lakh 80. 2 lakh 40 plus 2 lakh 10, 1 lakh 80 is the accumulated depreciation on machinery 1. 450 plus 180. See this? 2 lakh 40 plus 2 lakh 10 plus 1 lakh 80, 6 lakh 30. And on machinery 2, how much is the depreciation already charged? Only 1 year depreciation. 2 lakh. I would write here on machinery 2, 2 lakh is already charged. Can I say the balance here is 8 lakh 30? Now we'll have a small check. Opening balance of machinery at original cost is 20 lakh 40. Opening balance of provision for depreciation is 8 lakh 30. Take 20 lakh 40 in your calculator and deduct 8 lakh 30. Original cost minus accumulated depreciation. You would get WDV. What is the WDV of the asset? 12 lakh. You will get the same number. That means this number has been correctly written. Now we would have to record current year depreciation of 3,25,000. When I record current year depreciation of 3,25,000, 1,50,000 of this depreciation is on machinery 1. 1,75,000 rupees of this depreciation is on machinery 2. So the entry will be depreciation account debit to provision for depreciation. It will nowhere affect our machinery account. I'll repeat, journal entry for depreciation with provision method is depreciation to provision for depreciation. It will not come anywhere in machinery account. So in provision for depreciation account, I would write on 31st of March by depreciation on machinery 1 and on machinery 2. What were the amounts? On machinery 1, 1 lakh 50, on machinery 2, 1 lakh 75. 1 lakh 50, 1 lakh 75. Putting them together, 3 lakh 25. We're done with provision for depreciation. Now we'll close the ledgers. First, we'll close the asset ledger. I would write on 31st of March by balance carried on M1 11 lakh, M2 9 lakh 40, M3 should not be written because M3 was not there. Then I would write here 20 lakh 40. M3 was bought only next year. And in this here, I would write the balance carried down again. How much is the balance carried down as on this date? Provision for depreciation. For M1, it was 6 lakh 30 at the beginning. During there, we depreciated by 1 lakh 50. So it will become 7 lakh 80. And machinery 2, at the beginning of there, it had been depreciated and accumulated depreciation was 2. And during the year, we have further depreciated it by 1 lakh 75. So it will become 3 lakh 75. Putting it together, 11 lakh 55. Done. There is no disposal in this year. Disposal is done in next year. So disposal ledger, no transactions. So now I have closed the ledgers for this year. I'll bring it to next year. 20 lakh 40, 20 lakh 40. Asset account, I'll write 2 balance brought down M1, M2. M1 11 lakh, M2 9 lakh 40. M3 will actually not come here. It is later bought. 20 lakh 40,000. Opening balance written. And let me write opening balance here also. Here totals will match at 11 lakh 55. I would write balance brought down M1, M2, 7 lakh 80, 3 lakh 75, together 11 lakh 55. What is happening in 2024-25? 24-25, that first asset gets disposed. M2 will get disposed. So when M2 gets disposed, from my original cost based machinery account, I will remove on 1st of April 2024. No depreciation also needed. I'll remove the asset. So asset has to be credited. I'll write on the credit side by disposal. M1 of 11 lakh getting disposed, transferred. And in machinery account, I've written by disposal. So in disposal account on 1st of April 2024, I should write machinery worth 11 lakh has come. When the machinery gets removed, accumulated depreciation which was maintained on that asset is also no longer required. On M1, we had accumulated depreciation of 7 lakh 80. This will be now transferred to disposal. So I'll write in provision for depreciation, provision written off. So provision is reducing. That's on the debit side. I'll write by disposal on M1 7 lakh 80. And in machinery provision for depreciation, I've written by disposal. In disposal account, I would write by provision for depreciation 7 lakh 80,000. I hope all of you understood. Now in the disposal account, I would have to write sale consideration received, and difference between them will be profit or loss. What is the entry for sale? Cash account debit to disposal account. So what is the entry for sale? Cash to disposal. It was disposed or it was sold for 1 lakh 34. So I'll write here by bank 1 lakh 34. Now take the total here. 11 lakh is the higher amount. I'll write 11 here, and if you deduct, you will get 1 lakh 86,000 as your loss on sale of the asset. Loss on disposal. So in disposal, I've written by P&L. In P&L, I'll write debit side to loss on disposal of M2 or machinery 1 lakh 86,000. Disposal account closed. And in fact, from here the problem is nothing much left. Next year we need to provide depreciation on M2 1 lakh 85 new depreciation, and M3 is been purchased, recorded. So here we're done with this disposal. Now record the new machine purchased 8 lakh 10. New machine purchased 8 lakh 10. I'll write in my machinery account. This is my machinery account. 1/4/2024, same date. I would write to bank account. What we bought is M3. What is the price of M3 purchased? Machinery 3 was purchased for 8 lakh 10. That's it. Now I would go for depreciation on machinery 2 and machinery 3. And here when I write balance carried on later at the end of there, machinery 1 11 lakh is gone. Machinery 2 9 lakh 40 and machinery 3 8 lakh 10 will come. Fine. Let's write our depreciation for the year. How much is depreciation on machinery 2 and 3? 4 lakh 55, which is 1 lakh 85,000 on M2 on re-estimated basis and 2 lakh 70,000 on machinery 3. Journal entry for depreciation is depreciation account debit to asset, but we cannot write depreciation to asset. We'll write depreciation to provision for depreciation. So in provision for depreciation account, I'll write by depreciation on M2 and M3, 1 lakh 85 and 2 lakh 70, 4 lakh 55 total. And once this depreciation is done, then we'd have to just close the ledgers. Let me close my machinery account by writing here 31st of March 2025 by balance carried down M2 9 lakh 40, M3 8 lakh 10, together 17 lakh 50. If you check the totals will match at 28 lakh 50. Machinery account closed. Then I'll come to provision for depreciation ledger. The total year is higher. I would write the total as 16 lakh 10, and from 16 lakh 10 I would write balance carried down. On machinery 1 there is no accumulated depreciation. 780 was credit, 780 is removed. On machinery 2 we had 3 lakh 75. I'll add 1 lakh 85 and make it 5 lakh 60. And on machinery 3 I would write new depreciation of 2 lakh 70. Putting them together 8 lakh 30, the ledger will tally. Provision for depreciation ledger is closed. Original cost depreciation, original cost machinery account is closed. And anyways, our disposal account is anyways closed after removal of that M1 and recording loss on the removal of M1. And this is answer to depreciation question on sum of your digits method with change in useful life and a change in scrap value of machinery M2 in the last year. Let's now discuss solution to question 2B of our CA Foundation September 25 examination. This is asked in the place of the usual rectification of errors question. And again, one which would have taken slightly by surprise because people were expecting a genuine rectification of errors question, but they made this question as record or rectify. Meaning, if in case they have not recorded it, if there is no error, you tell us what is the journal entry. If in case they have recorded it incorrectly, then tell us what is the rectification entry. Good one. Not very difficult to do. Some questions are looking quite unique, but those transactions, the same thing is there in our own ICAI study material only issued. So, good, doable one. Let's start. 12 marks for this. Pass the journal entries to record or rectify the following transactions in the books of Mr. Dutt. Suspense account may be used. So, they have not told the stage of there. They have not told it is after final accounts. They have not told it is before trial balance. They're telling if need, no, you use. So, basically, I'm assuming that these are after trial balance, before final accounts. Begin. Sale of goods to Mahesh at a list price of 1 lakh 80. So 1 lakh 80 is not the final price. In the menu or in the price list, we've quoted 1 lakh 80 and we're giving him 10% trade discount. So out of 1 lakh 80, if we give him 10% discount, it's 18,000. So basically, we're selling it to him at 1 lakh 62,000. Out of the amount due, basically 1 lakh 62, 50% is received, not in cash. They told out of that 50%, two-third is by check and the balance is by cash. Wow. We should do the amount received multiplied by 2 by 3. That will be check multiplied by 1 by 3. That will be cash, and all our computations will go wrong because they've told CGST and SGST is applicable at 6%. So first I should take 180, deduct 10% trade discount, 162. Then add 6% SGST, 6% CGST. That new amount what we got, that is the money Mahesh owes us. In that, he will give 50%. In that 50%, two-third will be check, one-third will be cash. Balance 50% will be outstanding in the name of Mahesh only. So I will split it into two entries and then record it for your ease of understanding. However, you can write one single entry for this as well. So when I purchase goods, when I sell goods to Mahesh, Mahesh owes me money. So Mahesh is my debtor, Mahesh account debit. And I've sold him goods, goods are going out, I will credit sales. Sales will be credited at 1 lakh 80, but there is trade discount of 10%. I deduct 10%, that is 18,000 to arrive at 1 lakh 62. I would have debited Mahesh by 1 lakh 62 if not for GST. So GST is applicable on this transaction. I'm collecting the tax from Mahesh and I'll pay it to CBDT on his, GST department on Mahesh's behalf. So I need to collect 6% SGST, 6% CGST on 1 lakh 62 and it will be credit. Output CGST 162 into 6%, 9,720. Output SGST 1,62,000 into 6%, 9,720. The amount that I should collect from Mahesh is 1,62,000 plus 9,720 plus 9,720. That is 18,000, 19,440. If I add, it turns out to be 181,440. This money, what my sundry debtor Mahesh owes me, is not going to pay full of it. He paid 50% of it. 50% of 181 440, but is not paying full 50% in cash. 2/3 of it by check, 1/3 of it by cash. So I would credit Mahesh account, not for full amount, but for 181 440 into 50%, which turns out to be 90,720. Of this 90,720, 2/3 I'll receive it by check. I will debit it to bank. 1/3 I'll receive it by cash. I'll debit it to cash. And balance 90,720 will be there in Mahesh account only. Instead of writing this entry this way, you can choose to write Mahesh account debit 90,720, bank account debit 60,480, cash account debit 30,240, to sales 1,62,000, to output CGST 9,720, to output SGST 9,720. I'll tell you what is the alternative way of writing this entry. If in case you have written only one single entry for this in the exam, it would look somewhat like this. I would debit Mahesh, but not for 181 440, 90,720. This is the extent to which Mahesh owes me money, because part of it he has already paid me. How much did he pay? He paid me 10,080 by check, and he has not 10,080, 60,480 by check, and 30,240 by cash. That is the money that he has already paid me. Basically, he has paid me 90,720. He is yet to pay me 90,720. And this is because he has bought goods from me. Sales to him 1,62,000. He has to pay output SGST 9,720, and he has to pay output CGST 9,720. This is my entry. So you could have written it like this, two separate entries, or one single entry this way. Either of the ways you have written, you would get full marks for the same. I hope you guys have understood this. Let me take you to the second transaction. What's happening in the second transaction? One of the debtor is the customer who owes money to me, Mr. X. So Mr. X is my customer. I have sold goods to Mr. X. Mr. X has to pay me money. Has agreed to pay his dues. He is supposed to pay me 3,000. He's agreed to pay. Not to me, but to Mr. C, who is a creditor of Mr. Dutt. I am Mr. Dutt. I have sold goods to X. X has to pay me 3,000. And I have purchased goods from C. I have to pay C 3,000. So X is my customer, C is my supplier. I am Dutt. X is my customer, C is my supplier. I have to collect 3,000 from X and I have to pay 3,000 to C. So instead of me collecting 3,000 from X and paying to C, my customer Mr. X is my debtor. He directly paid the money to Mr. C, my creditor. So what's happening in this transaction? My debtor has paid money to my creditor. My debtor balance decreases because he paid money. My creditor balance decreases because he has already received money. So Mr. X and Mr. C, debtor and creditor, both will decrease. And when the debtor is decreasing, asset decreasing, credit. When the creditor is decreasing, liability decreasing, debit. The journal entry is Mr. C, the creditor is decreasing by 3,000 debit. Mr. X, the debtor is decreasing credit by 3,000, and being creditor paid by debtor recorded is my transaction. I hope you all got this second one. Now let's go to third one. Employees had been given inventory having selling price of rupees 1 lakh. So I have given employees some inventory whose selling price is 1 lakh, but I have not sold it to my employees. Yeah, I have given it. So I cannot give it and then expect selling price from them. I can expect only cost. So I would have to be writing the entry at cost price, not at selling price. Ignore 1 lakh, consider 75,000. First point for you all to note. Second one, this is not sales. Inventory is going out, but I cannot credit sales. I would have to credit purchases because this is decrease in purchase. And this is given on the eve of Deepavali as gift. I can write it as salary or I can write it as miscellaneous expenditure. Let's wait and see what they'll give in suggested answer. Either of it should be fine. And SGST and CGST is applicable at 6% each. Okay. I need to reverse the CGST and SGST input that I would have previously taken. When I would have purchased, I would have taken input SGST, input CGST. I would have to reverse it now. So what will I do? I can debit salary, or I think it's not fair to debit salary. I think the answer should be miscellaneous expenditure. The reason why I'm saying it's miscellaneous expenditure is if you debit salary, then it means that to this extent you would not give him salary later. You're giving it to him as gift. So it's not bad to debit miscellaneous expense. But let's wait and see what would they give. I think either of it written, the answer mark should have been given. I would credit purchases. How much of purchases? Nominal value, sorry, cost of the goods, which is 75. I would not debit 75 because when I purchase this inventory, I would have written purchase account debit, input CGST account debit, input SGST account debit to creditor. I can't take that credit anymore because goods have been issued to our employees free of cost as gift. So I need to reverse that input CGST and input SGST on 75,000, not on 1 lakh at 6%. 75,000 into 6%, 4,500. Another 75,000 into again 6%, 4,500. Together 75 plus 9, 84,000 should be debited either to salary or to miscellaneous expenses. Got it? Good. Let's go to fourth one. What's happening in the fourth case? Sale of rupees 2,500 has been made to Mr. Kamal Kumar. When you sell goods to Mr. Kamal Kumar, entry will be Kamal Kumar account debit to sales has been debited to Messrs. Kamala Rani. Oh, what did you do? You sold goods to Kamal Kumar. You should write Kamal Kumar to sales. You already wrote Kamala Rani debit to sales. They have not told anything about credit, so I am assuming credit is correct and sales has been correctly credited. That's the right way. So the rectification is very simple. We were supposed to debit Kamal. We have not debited. We will debit now. We were not supposed to debit Kamla. We have wrongly debited Kamla. So we will credit Kamla. Okay, na Kamla. Kamal Kumar account will be debited by 2,500 because it is the account that should have been debited, but it is not debited. Kamla Rani was incorrectly debited, which will be now credited by 2,500. By that we finish our fourth one. Let's proceed to next one. What's there after this fourth one? Fifth one. Second hand machinery was purchased and its overhauling charges paid rupees 15,000. So when you buy a second hand machinery and get it overhauled before you start utilizing it, such overall repair expenditure, whatever is there, it should be capitalized by adding it to the cost of the machine. So this 15,000 should be added to second hand machinery's expense cost. So basically the entry is machinery to cash. It should not be repairs to cash. The accountant debited overall charges to repairs. Shabash is done. Error of principle. Instead of charging that overall expenditure to the cost of the asset by increasing the cost, is incorrectly charged it to expense. Now we'd have to reverse the expense. So repairs was incorrectly debited. Now I will credit it. Machinery should have been debited but not debited. I will debit it. This is to the extent of 15. This is the rectification entry. Repair expenditure in the form of overhaul should have been added to the cost of the asset machinery, which was not added. Now I'll debit it by adding. It was wrongly debited to repairs and maintenance. I will reverse it by crediting. And then they're telling depreciation is to be charged at 10%. If I would have added this 15,000 to machinery, machinery would have been recorded at 15,000 higher price. I would have charged 10%, that is 1,500 depreciation on this machinery. Because I have not increased the value of the asset by 15, I have incorrectly written to PL. Asset is recorded at lower value, depreciation has gone down by mistake. Now that I have rectified the value of the asset, now I have to provide for depreciation. Entry for depreciation, like we all know, is depreciation account debit to machinery. How much? Same, 1,500, which is 15,000 into 10%. I have written it as two separate entries. You can actually write one single entry. Instead of recognizing machinery at 15 and then depreciating it by 1,500. Instead, recognize machinery at 15,000 minus 1,500, 13,500. Book depreciation expense of 1,500. Previously incorrectly recorded repair expense will be now reversed to the extent of 15,000. So you can either write these two entries or you can choose to write this one single entry. Either ways, the answer is absolutely correct. We're done with 5 of these record come rectify cases. Let's go to 6th one. Purchase of rupees 151 from Mr. X was entered in purchase day book as 15. They were hungry. Vatte hashita they have eaten one. Wow, shabash. So what did they do? Purchase is 151. Correct entry is purchase account debit to X. They have written in purchase book correctly, but not at 151. They have written at 15. No, don't write, you'll write 1. No, 151 minus 15. 136 is the extent to which we were supposed to debit purchase. We have not debited. Or I'll tell you differently. Purchases should have been debited by 151, but purchases is debited only by 15. So balance 136 I will debit now. So purchase account should have been debited by 151, but they've wrongly debited only 15. Balance of 136 if I debit, total purchase will become 151. Rectified. See further, what else have they done? It should be posted to Mr. X as 151. They posted as 51. They forgot 100. Purchase account debit 151 to Mr. X account 151. They have written purchase account debit 15 to Mr. X 51. Mr. X should have been credited by how much? 151. But they've credited by how much? Only 51. I will credit the balance 100 here, and that's it. But the debit credit is not matching. Debit is 136, credit is 100. If you remember, they mentioned in the heading of the question, use suspense wherever need be. So I'll write 2 suspense 36, and that's how I'll close this. Got it? Good one. Sixth one done. Seventh one. R has been issued credit note. Credit note is a note given when we credit that party. I have sold goods to that party. He becomes my debtor. I write R account debit to sales. When he doesn't like the goods and he returns it, and I'll give the goods back, I'll receive the goods back from him. I will write sales return account debit to R. When I write sales return account debit to R, I'm crediting R. So I'll take the printout of the journal entry and then give it to him saying that, boss, I've credited your account. The note which tells that I've credited my debtor is credit note. So R account has to be credited. So I will credit R account. R account has to be credited. What is the credit note given? It is to the extent of 6,000, allowing him rebate. Rebate means decrease in the money that he owes me. If he is not happy with the goods, when he returns the goods, I'll give him rebate saying that in the future you buy goods to this extent. And basically it's like sales return. As goods supplied to him were found defective. CGST and SGST was that on 6%. So that also has to be reversed now. Now, what they've mentioned now, rebate is given to the extent of 6,000. Now I need to reverse the CGST, SGST previously charged. When I booked it as sale, I would have credited no output SGST, output CGST. I would have to reverse it by debiting output CGST and output SGST. Don't write 6,000 as credit to R. He's returned the goods and got the rebate of 6,000. I need to reverse GST on 6,000 at what is that percentage given? 6%. 6,000 into 6%, 360. 6,000 into 6%, 360. 6,720 is the extent to which Mr. R gets credit note. Because I'm reversing GST also, which was previously charged on such sale of 6,000. I hope you're getting it. Then after this seventh one, this is again a similar question is there in our study material on journals. S was also given a credit note, 2,000 for making prompt payment. Oh, this is like discount. S made prompt payment, so we gave discount. So this has to be again debited, but this will be not debited to rebate. It is discount allowed account. How much discount did we allow? 2,000. And discount is given to whom? S. When I give discount, I'll write discount allowed to S. If I don't give discount, he has to give cash. Then I'll write cash to S. If I don't collect cash, but still reduce his account, I'll write discount. Now I'm crediting S account now. The way I credit my S account, I print it in a paper and then give it to my S, saying that boss, I've credited your account. That makes it credit note. Previously, when I recorded sale, I would have recorded sale for a higher amount. So I would have charged GST on that. Now, when I reverse, because he is making the payment promptly and give him discount, the previously recorded output CGST and SGST has to be reversed. I think this is how this should be. However, I am giving you a disclaimer. I am solving this well before the suggested answers are released by the institute. No one would have, I think this would, fingers crossed. I'm just telling it. I'm not very sure, but I can tell this that this might be the first video on YouTube where they've discussed all the solutions to September 25 paper in detail. No review, no analysis, no like half cooked answer and then tell this might be the answer. You multiply this with this. I'm thinking so. Correct me if I'm wrong. I know you will give me galis in comments, but I'm not sure when I'm recording this, so I'm telling you this. So once the suggested answer comes, please check with this whether they've debited output CGST and output SGST or not. But according to me, I think they should do. How much is the rate of GST? 6%. 2,000 to 6%, 120. 2,000 to 6%, 120. Together, when I credit S account, I should be crediting it by 2,000 to 40. That is the extent to which you'll get a credit note. Got that? So we're done with 7th one and we're done with 9th one. Now let's see 9th one. Sorry, 7th one and 8th one, 9th one. An accrual. Accrual is basically outstanding of telephone charges 2538 has been completely omitted. There is 2538 rupees of expense. They should have paid it. They have not paid it. It is outstanding and it is omitted. When it is paid, expense is entry is expense account debit to cash. When it is not paid, expense account debit, we won't credit cash, we'll credit outstanding expense. Entry is expense account debit to outstanding expense or telephone charges account debit to outstanding telephone charges account. This entry has been not passed. So there is no wrong entry, there is no reversal of wrong entry. Right entry is the entry that I should pass. So I would write the entry as telephone charges account debit to outstanding telephone charges. This is to the extent of 2538. Done with 9th one. Now let's see 10th one. A check of rupees 25,390 issued to Mr. C. Das, shown under trade payables. So I have given check to Mr. C. Das, my supplier from whom I purchased goods. Entry is C. Das account debit to bank towards his due has been wrongly debited to purchase. Oops. I should have debited C. Das. I have given money to C. Das. So C. Das was little busy talking to Leo Das and then he was checking, are you Leo Das or not? Are you Leo Das or not? He was getting confused. And instead of writing C. Das account debit, you incorrectly wrote purchase account debit. You should have not written purchases, but you wrongly debited purchases. Maybe if you go sit in a cafe and have a sip of coffee in Leo Das cafe, then you might correct this entry. Purchases was wrongly debited. It will be now credited by 25,390. You gave check to C Das. You should have debited C Das. You have not debited. Now we will debit C Das 25,390 and this is the entry. Why are we not reversing input CGST and SGST? The reason is pretty simple. They have not told that GST is applicable on this transaction or this specific purchase that's been recorded. So I'm not reversing. However, let's wait and see if the institute will assume 6% and then reverse. I think they should not, because wherever GST is applicable in that transaction, they mentioned the rate. So I have not done this. So this is the entry for 2B, that is journal cum rectification of errors question. Let's now solve question number 3A from our September 2025 paper in the books of Mr. Y. They've asked us to do trading and P&L account. So this is a question on incomplete records. Looked very similar to final accounts of sole proprietor, but yeah, this turns out to be a question on incomplete records. Conversion of single entry to double entry. They have asked us to prepare trading P&L as well as balance sheet. There are a lot of items with lot of adjustments and some data is also given. Not very big, decent size question. Can we begin? Let's start. So creditors, they've given opening and closing balance of creditors. Opening 6,30,800, closing 4,96,000. I'll open one creditors ledger, and in my creditors ledger, I would write by balance brought down 6,30,800 to balance carried down 4,96,000. And I would write this 6,30,800 in my opening balance sheet, 4,96,000 in my closing balance sheet. Opening balance sheet will help me find opening capital to be posted and to closing balance sheet, and closing balance sheet anyways has to be prepared. It's been asked. So in my opening balance sheet, that is balance sheet as on 31st of March 2024, let me write creditors 6,30,800. And similarly, in the balance sheet as on 31st of March 2025, I'll write creditors 4,96,000. Done. And next, I'll go to expenses outstanding. There is outstanding expense. I'll open ledger. I would write 24,000 opening and 13,200 closing. And I would post this to respective balance sheet also. In the closing balance sheet, outstanding expenses will be 13,200. And in the opening balance sheet, expenses outstanding will be 24,000. 24 and 13,200. That's perfect. And I'll open the expenses outstanding ledger. Because it's a liability, I'll write opening on the credit side. By balance brought down 24 to balance carried down 13,200. I think we're done with posting the expenses balance. Then I'll come to fixed assets. Fixed assets will include machinery. 4,64,400 is opening. 481,600 is closing. Let me open fixed assets ledger. Opening balance 4,64,400. Closing balance 4,81,600. And 464,400 and 481,600 will go to balance sheets also. In my closing balance sheet, this is opening balance sheet. I would write fixed assets including machinery 464 400, and in my closing balance sheet fixed assets including machinery 481 600. Correctly posted. Then I have with me stock in hand. Opening stock 321 600, closing stock 444 800. We will not prepare stock account, but it will go to our trading account. In my trading account, I would write opening stock as 3,21,600. I would write my closing stock as 4,44,800, and this will appear in our respective balance sheet also. In our closing balance sheet, I end up writing stock, closing stock 4,44,800, and in my opening balance sheet, I end up writing stock 3,21,600 rupees. What do we have after this stock item? We have cash in hand and cash at bank. Both opening 1,18,400 and 1,60,000. In the opening balance sheet, I would write cash in hand, cash at bank, 1,18,400 and 1,60,000, and I'll finish writing sundry debtors also 661 200 given. And in the closing balance sheet, I'd write cash in hand, cash at bank, sundry debtors. Cash in hand and cash at bank I know 48 and 275 200, but sundry debtors is not given. We will find it. We'll open one ledger called as sundry debtors ledger. I would write 661 200 and then question mark. We'd have to open one cash in hand and cash at bank to record all the transactions of cash. Well, let me do that as 2-column cash book. I would write opening balance brought down 118 400 and 1,60,000. Then I'll write balance carried down at the end. How much is the balance carried down of cash and bank? Cash it is 48. Bank it is 2,75,200. 200. Done. Recorded. Then we have our debtors account anyways, which I have not yet opened. I'll open debtors. Opening balance 6,61,200, 200, and I have to find my closing balance, which I don't know. I need to find credit sales, discount, allowed, bad debts, everything, and then I'll figure out my closing balance of debtors eventually. What do I have after I post all of these items? They've given some years transactions. What is the transactions that they've given here? Cash and discount credited to debtors 25,60,000. So discount allowed to debtors and cash received from debtors together it is 25,60,000. I don't know the split. I actually need the split. So I know discount is allowed to debtors, which will decrease debtors. Cash is received from debtors, which will again decrease debtors. Together this is 25,60,000. Individually I don't know. My God, sorry. Phone was not on silent and I got scared because I was fully focused on the subject. That's how you guys also should be one minded. My heart skipped a beat actually. Fine. 25,60,000 is the discount allowed and cash received from debtors together. I'll later find the split. And what is it that I would have to do now is in my cash account, I know that there will be some money received from debtors. I would write here, but I don't know the amount. And discount allowed is an expense, and this should appear in my P&L account debit side. Right now, I don't know how much is discount allowed. Later, when I get to know, I will write. So I've written in my P&L account just the name for it to be known later. Then I have with me return from debtors 58,000. So when you say return from debtors 58,000, our customers to whom I've sold goods, they've returned it to me. It is sales return, yeah, 58,000. Journal entry is sales return account debit to debtors. Firstly, it has to be deducted from sales. I don't know how much is my sales. Cash, credit, both will be there. And from that, I will deduct my sales return. This I know, 58,000. Sales have decreased. And next, it should be written in debtors account on the credit. Why? See, is my debtor, he has to pay me money. But not if he returns the goods. He's returned the goods to me to the extent of 58,000. Because he's returned the goods to the extent of 55, he no longer has to pay me money. I hope you all got this. Debtors 58 done. Then there is bad debts to the extent of 16,800. Bad debts journal entry is bad debt account debit to debtors. So in debtors account, I would write by bad debts 16,800. And in my P&L account, on the debit side, I would write bad debts, but this time I know the amount. Unlike discount allowed, which I don't know, P&L account only debtors I know it is 16,800. What's next after bad debts? We have gross sales. Both cash and credit together is 2872 400. I don't know how much is cash, how much is credit. And they mentioned gross. Gross is not net. Net means after deducting sales return. Gross means before deducting sales return. So this is not what will appear on the outer column of trading account. This is what will appear in the inner column of trading account as cash sale and credit sale together. But I actually need how much is cash sale, how much is credit sale separately. If not, I can't close my cash account, I can't close my debtors account. So cash sale, credit sale together, 28,72,400. Maybe I'll find credit sales here. I'll put that to my debtors account and then find my closing debtors as balancing figure there. But we'll eventually close it. Don't worry. So right now 28,72, 400. Then discount allowed by creditors is 28. My suppliers have given me discount of 28,000. This is discount received income. So in my P&L, I would write discount received as income to the extent of 28,000. And journal entry is income. No, creditors discount received. Yeah, creditors account debit to discount received. So in creditors account, I will write 2 discount received. How much? 28,000. And later this gets transferred to P&L. So discount received account debit to P&L. Journal entry is creditors account debit to discount received account debit to P&L. Here I have written debit and I have written it as income in my P&L account credit side. What's after 28,000? Then next. Looks very difficult if in case you are not used to, but this is a very simple question. Returns to creditors 16,000. So my suppliers, I have returned goods back to them. My suppliers are my, like, from people from whom I purchase. No, when I return goods to them, it will become purchase return. Journal entry is purchases the goods come in, purchase return the good go out. So it is creditors account debit to purchase return account. So in creditors I'll write here to purchase return 16,000. I don't have to pay money to the extent of 16. It will reduce. And in purchases I would have to deduct in trading. Trading, I don't know how much is purchase. Purchase can be cash, credit, both. I don't know how much, but from there I'll deduct purchase return of 16. This is what I know. I hope you all got it. Then after that we have capital introduced by check 3,40,000. So 3,40,000 rupees. The proprietor brings it back to the business, brings it to the business. So bank balance will increase, bank account debit. Capital will increase, credit. Journal entry is bank account debit to capital. In the balance sheet, closing balance sheet, I don't know opening capital. That will come from opening balance sheet. To this I'll add additional capital of 3,40,000. What is mentioned now. And bank balance will increase in our cash and bank account, whatever is here. I would write here to capital. In the bank column, I'll write 3,40,000. I hope everybody understood this. Then we have with me collection from debtors deposited into bank after receiving cash 25 lakh. So I can very confidently tell my debtors have paid me 25 lakh rupees. First I received it in cash and then I deposited it into bank. So when I receive it from my debtors, journal entry is cash account debit to debtors. In cash account, I'll write to debtors 25 lakh. And in debtors account, I would write cash is 25 lakh. Now I know. My debtors paid me cash of 25. Cash and discount together was 25 lakh 60. So discount becomes 60. So I would write discount as 60 and this discount would appear in my P&L account. Debit side, discount allowed 60. Peace. One item solved. But we are not done with this transaction yet. My debtors gave me 25 lakh. I have written cash 25 here. In cash account, I wrote debit side 25 lakh. Correct. This is sent to bank. So bank balance will increase by 25 lakh. So here I'll write to cash. Bank account debit to cash. And in cash account, I should write by bank. No. So 25 lakh increased in cash column and it is sent to bank. 25 lakh goes out of cash column. So debit cash 25 lakh, credit cash 25 lakh. Cash gone. It goes into bank. So bank balance will increase by 25 lakh. I hope everybody got this. Next, what exactly do we have? After that, we have cash purchases of 41,200. Hey, don't tell her cash purchase means, sir, how can you purchase cash? How much is 100 rupees? Uncle, 100 rupees cash is 100 rupees cash, 100 rupees. Oh, 100 rupees cash, 100 rupees. 200 rupees cash is 2. It's not like we're buying cash, yeah. Goods have been purchased for cash. I hope you got it. So these cash purchases will appear in our cash account on the credit side. I would write here buy purchases on cash 41,200. 41 is mentioned. And in my trading account, I would write here cash purchase 41,200. I don't know credit purchase. Maybe I'll find my credit purchase in my creditors account. Wait for it. What do we have after? Battery was low. I had to put it on charge. Next, expenses paid by cash 3,82,800. Expenses is paid by cash. Journal entry is expense account debit to cash. In expense account, I'll write debit side to cash 3,82,800. expense is paid. And in cash account, I'll write by expense, 3,82,800. Done. Next, I have with me drawings by check. Drawings will reduce capital and it will reduce my bank balance by 17,200. So in the bank column, I'll write credit side by drawings 17,200 and it will eventually reduce my capital also. In my balance sheet, below the capital, I'll write less drawings 17,200 rupees. Next, machinery acquired by check 1,27,200. Machinery is in acquired by check. Entry is machinery account debit to bank. So in my machinery account, fixed asset account, I would write debit side to bank 1,27,200. And in my bank account, I would write credit side by machinery purchased 1,27,200. Bank balance decreased, machinery account balance increased. Then cash is deposited into bank 2 lakh. So cash is deposited into bank. In the bank column, it's going to be debit because it is increasing. And in the cash column, it's going to be credit because it is decreasing. And when you write the amount in bank column, you should write to cash. When you write the amount in cash column, you should write by bank. I hope you got it. Then we have cash withdrawn from bank 369,600. I am assuming this to be not for personal purpose, this is for business purpose. So cash is withdrawn from bank. Bank balance is decreasing. So in the bank column credit side 369,600, it is increasing cash. In the cash column debit side. So when I'm writing the amount in cash, I'll write to bank. When I'm writing the amount in bank, I'll write by cash. I hope you got this. Next, we have cash sales 1,84,000. We knew total sales. Now we know cash sales. From total sales, if I deduct cash sales, I'll get credit sales. By writing that, I can find closing debtors balance. Yeah. Cash sales 184. So can I say my cash balance will increase to this extent? So I would write here cash 1,84,000 increase because of sales. So in cash column, I've written debit. And let me take you to trading account. And in my trading account, I'll write cash sales as 1,84,000. Total sales is 28,72,400. In that cash sales is 1,84,000. If I deduct 1,84,000 from 28,72,400, I'll get 26,88,400 as my credit sales. So I've written credit sales in sales trading account. I would have to write it in my debtors account. Debtors account, we have left space for the same. I would write here two sales credit 26,88,400. Everything's here. Yeah. Balancing figure is balance carried down. Then last item, payment to creditors by check 24,10,800. We have paid our suppliers. Creditors account debit to bank account is the entry for 24,10,800. In creditors account, I wrote to cash. In my cash account, I will write by creditors. I'll write at the bottom by creditors. It's paid by check. Okay. Bank column 24,10,800. Everything's done and dusted, posted. That's the end of the question. Now what do? I would close one ledger after the other. Come on, let's close one ledger after the other. First one, debtors account. Everything's there. Find the balancing figure and that balancing figure will be closing balance. So 33,49,600 minus all these items, you get 7,14,800. 7,14,800, I'll write in the closing balance sheet as debtors. Done. And if in case you find the video too fast, watch it at 0.75x speed. People usually tell no, for best experience, watch it at 1.5x. We are already at 1.5x. You watch it at 0.75x if you find it fast. Then debtors ledger is closed. Creditors. We have opening creditors. I have cash paid to creditors, discount received from creditors, purchase return and closing balance. Balancing figure is credit purchase. Take the total on the debit 25,90,800, 29,50,800. Deduct 6,30,800. You get 23,20,000 as our credit purchase. This will go to my trading account. 23,20,000. I have written cash purchase, credit purchase was missing. Now I'll post 2320. Do 2320 plus 41,200, making it total purchase. Deduct 16,000, you will get total purchases as 23,45,200. You might get the urge to compute gross profit. Hold your nerves, don't do it. Close all the ledgers. Stay with the process. Don't skip the process. We have finished debtors, we have finished creditors. Now come to expenses. Opening outstanding 24, paid during their 382,800, but still 13,200 is outstanding. Oh, that is because there is some expense in current year. How much? 396 minus 24 is current year expense of 3,72,000. In expense account, I have written by PL. In P&L account, I'll write to expense. to expense 3,72,000. Done. Now we have finished our expense ledger also. Cash and bank. It has to match. Yeah. Everything else is written. There's nothing pending. There's nothing pending. Anything pending? No, nothing pending. So total them and it would match. You would get cash account total as 31 lakh 72. You would get bank account total as 32 lakh. We are done. Cash and bank account is also tallied. And see the machinery ledger, it's not tallying. Opening balance is 4,64,400. Purchased during the year is 1,27,200. So the total comes to 591,600. But balance carried on is only 481,600. The missing figure here is depreciation of 1,10,000. This depreciation of 1,10,000 I'll write in my P&L account on the debit. Come to profit and loss account. On the debit, if you write depreciation 1,10,000, everything's done. In incomplete record, if in case it doesn't tally no later, it's very difficult to find what's wrong. So do it calmly and do it under double entry system without any hurry in the process, in the order in which the question is given, and don't skip from one ledger to another ledger. Follow double entry system, calm and cool, and you should be able to ace this. Fine. Take the total of sales here to be written. It comes to 28 lakh 14,400. Add it with closing stock of 444,800. You get 32 lakh 59,200. From that, if you deduct 321,600 and 2345,200, you get GP of 5 lakh 92,400. I'll bring it down to P and L. GP 592,400. Add it with my discount received 28. 620,400 is the total. If I deduct 60, 16,800, 372 and 1 lakh 10, I'll get net profit as 61,600. And in my balance sheet, after deducting drawings of 17,200 and after adding 3 lakh 40, I will add net profit of 61,600. Next thing, in my opening balance sheet, I would find capital as balancing figure, which will help me close my closing balance sheet. 464,400 plus 321,600 plus 118,400 plus 160 plus 661,200. 1725,600. Right? 1725,600 and deduct 630,824. You'll get opening capital as 10,70,800. This 10,70,800 you write here, add 340 minus 17,200, add 61,600. Tada! You get 1455,200. Total on the balance sheet. Liability side 1964,400. Total on the balance sheet. Asset side 1964,400. And there you go. Your incomplete records question is complete under double entry system and it's tally. Let's now solve question 3B from our September 2025 paper of CA Foundation Accounting. This 3B is from the chapter of partnership and it's on goodwill. So they've not asked you to compute goodwill. They only ask you to do accounting for goodwill in various cases. It's like they've given about 2-3 years of data. One after the other partner keeps coming. There's P alone. Papa P. Papa P is alone, single, lonely. And then Q will come, queen into his life. After sometimes R will come. After sometimes S will come. And then sometimes T will come and R will go. So in different case, every time when someone's coming, no, before that the company or the entity partnership has grown little. There is some goodwill increase. And when the new partner comes, he has to contribute for that goodwill, for the sacrifice made by the existing partners. How much goodwill should the new partner bring? How much goodwill will belong to the old partners? Whom to debit, whom to credit? They've asked all of this in the form of journal entry. Let's begin. Mr. P was carrying on a business. On 1st of April 2023, he admitted Q as a partner, giving how much? 1/4 profit. So 1/4 will belong to Q. So 1/4, if it belongs to Q, it means out of one cake, it's cut into 4 parts. One out of the 4 pieces will go to Q. So the remaining 3 out of the 4 pieces will remain with P only. And on this date, goodwill is agreed to be 24,000. They've asked journal entries at each case. See, all these arrangements were there. You are required to show working of goodwill and to pass the required journal entry. So let's not read the full question and then confuse ourselves. We've read little, we'll write entry for that little. Then we'll read little, then we'll write entry for that little. Personally, I feel this 8 marks was lottery. Very easy. But quite unique from the usual set of questions. There is no agreement between ICAI and you know that you'll read last 3 attempts papers or follow some analysis and we'll give you question like that only. But if you remember our AQ in the class, we've done something similar to this. That goodwill computation. Same thing, you'd have to do 3 times. That's it. 8 marks they won't give just like that. No. Sumne kodtare 8 marks. Huh? Observe. So first, we should like raising the goodwill. We credit it to old partner in old profit sharing ratio. Old partner means only one guy over P. So credit 24,000 to P. So goodwill of 24,000 debit belongs to P credit. Now this will be shared between P and Q. So now when you write off goodwill, it should be written off to all the continuing partners in new ratio. So what is the new ratio between P and Q? Q is going to get 1/4. So 24,000 into 1 by 4 is what will belong to Q. So Q's capital will take 6,000 and put it to P. Or you can just write it like when we write off goodwill, Q's capital should be debited by 6. And then P's capital should be debited by 24,000 into 3 by 4, which is 18,000. When we raise the goodwill, entry is goodwill to partners. And when we write off the goodwill, entry is partners capital to goodwill. So when we raise it, old partners, old profit sharing ratio. When you write it off, new partners, new profit sharing ratio. Draw this table. Find the net difference. For the net difference, pass one single journal entry and we're done. So 24,000 credit, 18,000 debit. Difference has to be deduction. 24 minus 18, 6. And higher number is credit. I'll write 6,000 credit, 6,000 debit. So the journal entry is Q account should be debited by 6 and P account should be credited by 6. Q's capital account debit 6,000 to P's capital account 6,000. This is the adjustment for goodwill on admission of Q as a partner. First part done. Then we go to next part. And after this, are they quite? No, next year. I'll change the color. On 1st of July 2023, R was admitted as a partner. And when R was admitted as a partner, goodwill of the firm is agreed to be 40,000. And the new profit sharing ratio between P, Q and R is 3:1:1. What is the old profit sharing ratio between P and Q? It is 3:1. The new profit sharing ratio between P, Q and R is 3:1:1. Remember that? Now, I'll go to a new table to pass new journal entry when admission of R has happened. Previously, whatever goodwill is been there, that will be shared between old partners in old profit sharing ratio. Old partners P and Q. Old profit sharing ratio 3:1. So goodwill of 40,000, I would write 40,000 into 3 by 4. 40,000 into 1 by 4. That comes to be 30,000 credit and 10,000 credit. And this has to be written off by debiting all the new partners in new profit sharing ratio. The new profit sharing ratio is 3:1:1. I'll write 40,000 into 3 by 5, 1 by 5, 1 by 5. 40,000 into 3 by 5, 1 by 5, 1 by 5 is 24,000 debit, 8,000 debit, 8,000 debit. So 8,000 debit and here 10 and 8, 2,000 credit. And here 30 and 24, 6,000 credit. So can I say the entry is R account debit to P to Q. R account debit 8,000 to P to Q. Let me write. R's capital account debit 8,000 to P's capital account 6,000 to Q's capital account 2,000. And this, my friends, is the accounting entry on admission of R as a partner. We're done with the second part. The question doesn't end here. There's still more left. I'll take blue color. On 1st of September 2023, S was also admitted as a partner. And then they valued goodwill as 72. They agreed to share the profits in the ratio PQRS 3:1:1:1. Previously PQR 3:1:1. Now it is PQRS 3:1:1:1. Fine. Let's do another table on admission of yes. First, goodwill is to be raised. Debit goodwill and credit all the old partners in old profit sharing ratio. When S is being admitted, old partners is PQR. Their profit sharing ratio is 3:1:1 and goodwill is 72,000. Am I right? Yeah. 72,000 into 3 by 5, 72,000 into 1 by 5, 72,000 into 1 by 5. Credit 43,200, 14,400, 14,400. This has to be written off. To write off, I'll debit partner's capital account and credit goodwill. So partner's capital account has to be debited in the new profit sharing ratio. New is 3:1:1:1. So 3 by 6, 72,000, 1 by 6, 1 by 6, 1 by 6. 3 by 6 will be half, yeah, 36,000 debit. Here it will be 12,000 debit, 12,000 debit, 12,000 debit. net difference will be Mr. S account should be debited by 12,000. R 14,412, 2,400 credit, and Q also same, and P will be 43,200 and 6,000. So it's basically 7,200 credit. The journal entry for the net difference will be S account debit 12,000 to P 7,200 to Q 2,400 to R 2,400. Will we write it? I would say S capital account debit 12,000 to P to Q to R. P 7,200, Q 2,400, R 2,400. Ta-da! Done. This is the accounting entry on admission of S as a partner. And that's not over here. Then there is retirement of R and admission of T, which is going to happen together. Observe. On 1st of April 2024, R decided to retire and T was admitted as a partner. And the goodwill was agreed at 96,000. And what is the profit sharing ratio? PQST. Now agreed the profit sharing ratio to be 5:4:3:4. What is the profit sharing ratio? 5:4:3:4. Old profit sharing ratio 3:1:1:1. So remember the order PQST. R will come in between. So first when you write off goodwill, the ratio is 3:1:1:1. But that will be between PQRS and T is not involved. Goodwill amount is 96. 96,000 into 3 by 6, 1 by 6, 1 by 6, 1 by 6. Half of it, 48,000 credit, 16, 16, 16. Now, when this goodwill of 96,000 is to be written off, R will not be involved. It will be not involving R. It will be PQST. Ratio is 5:4:3:4. 5 plus 4, 9, 9 plus 3, 12, 12 plus 4, 16. So it will be 5 by 16, 4 by 16. 3 by 16, 4 by 16. R is not involved. Identify the debit amount 30,000, 24,000, 18,000, 24,000. We have written this T 24,000 debit. Yes, 16 and 18, 2,000 debit. R 16,000 credit. Q 8,000 debit. And P 18,000 credit. So the journal entry is S account debit 2,000, T account debit 24,000, to P18 to Q8. Oh, sorry. Q account debit 8,000, S account debit 2,000, T account debit 24,000, to P 18,000 to R 16,000. Let's write debits. First debit Q 8,000, then debit S 2,000, then debit T 24,000, credit P by 18, credit R by 16. This is the entry. You can check the totals, it will match. And this has been asked for 8 marks. Yeah, I would say good one. All these agreements between goodwill have been not taken into account. We did this. 1st April 24, R retires and T admitted, and the partners decided to make goodwill entries in respect of goodwill without keeping the goodwill in books. So we should not use goodwill account when we write journal entries. We've done that and we're done. How many? 8 marks. So basically 2, 4, 6, 8. For every journal entry, they're allocating 2 marks. Good one to do. I would say it would have not taken much time to do if in case you have done something similar to this in the class. If you've conceptually done the chapter of partnership, if you've not just done last few exam questions, you've done structured way of goodwill, no, then this was a very easy nut to crack in the exam. Let's now start solving question number 4A from our September 2025 examination paper of accounting. This question 4A is from partnership, admission of a partner, and a similar question is there in our study material. There are 2 questions in the study material back to back. This is similar to the second question in the study material wherein they've not asked balance sheet if I'm not wrong. The one before this they've asked balance sheet, but that is very less similar to this. So the question which is there in the ICAI study module on in which they've not asked balance sheet is been given to the examination, slightly different numbers and expecting you also to do the balance sheet after admission. Let's start solving. PQ has been carrying on the business in the name of Bharat Springs in partnership, sharing profits and losses in the ratio 2:3. This is their old profit sharing ratio. Nice. What's happening after that? The balance sheet is being given, and later they've told on 1st of April they admitted R into partnership for 1/5 share. and R will bring 80,000 as share of capital. So this is the money that R will bring, and it doesn't bring his goodwill separately. He's unable to bring goodwill. So we'd have to adjust goodwill through capital account. Uh, we'd have to compute goodwill keeping our share in the profit and the capital contribution made by him. This is hidden goodwill problem. We've done an AQ also on this hidden goodwill computation, something very similar. Take that new partner's capital, reverse his ratio, and then multiply. You will get the total capital that should be there for the firm. Take other two old partners' capital with new partners' capital, deduct it from the total. The difference will become goodwill. That is the extent to which we need to adjust. Same, raise it like the previous question in the same paper, like how we did, credit it to old partners in old profit sharing ratio, debit it to new partners in new profit sharing ratio. Difference entry is the adjustment entry. Partners will not withdraw their share of capital or goodwill. That's the common adjustment. General reserve will be transferred to partners' capital. Again, they don't have to mention. We'll still do the same way. Provision is to be maintained on debtors at 2%. Creditors 1,440 is written back. Stock written down by 10%. Building is revalued. Plant is revalued. Furniture is revalued. But partners agree to keep the assets and liabilities at the same value. Meaning, we would have to do memorandum revaluation account. Assets and liabilities will appear as it is. You don't have to change them for the valuation in memorandum revaluation account. You have to write them at the same value. So all this I don't have to make any star marking next to items in balance sheet. Same building, same plant, same machinery, same data, same bills receivable, same stock. Bank will change because the new partner will bring in additional capital. General reserve will go to capital. Creditors will not change. Bills payable will not change. Along with P and Q, we will also have R coming in. P and Q's capital will change for general reserve share, and then memorandum revaluation and revaluation adjustment, and goodwill that will be attributable to them. That's it. A very simple question for 12 marks. Even if you've just done the module questions, you should be able to crack this one. And let's see. To begin with, let's start with the items in the balance sheet. We have capital, P and Q's capital. I won't finish one ledger and the start the other. I'll keep everything open. Revaluation open, partners capital open, balance sheet open. P's capital 80, Q's capital 1,60,000. So I would open my partner's capital account. I would write balance brought down P 80, Q 1,60,000. Then after P and Q's capital, I'll go to general reserve of 50,000. This is to be transferred to partners in old profit sharing ratio. Their PSR is 3 is to 2. Sorry, 2 is to 3. So 2 by 5, 3 by 5. 50,000 into 2 by 5, 20,000. 50,000 into 3 by 5, 30,000. Then after general reserve is transferred, creditors of 57,800. As it is, I'll write in my balance sheet. I'll not change anything. So do I have to keep it in inner column? Not needed. Why? Because we are going to do memorandum revaluation. Assets and liabilities will continue to be at the same value even after revaluation. So I've written 57,800. Then I have with me bills payable at 16,500. I would write bills payable at 16,500. Same. No change. And after bills payable, I will go to building. Building 85,000. Okay. Building 85,000. I would write it in my balance sheet. Building 85. No change. Then plant 55. Plant 55. No change. Then furniture 26,700. No change. No revaluation. I'll write as it is. Same with debtors of 48. I'm assuming that provision also will be reversed in the process when they said they want to keep the assets and liabilities at the same value. So I'm doing this. However, if in case institute differs from their study material answer, then they might not reverse provision and provision might still come in the balance sheet. But if you check that study material answer, even the provision is reversed. So I'm doing the same thing here. 48 done. Bills receivable 11,600. I'll write bills receivable 11,600. And then we have stock 54,800 as it is stock 54,800. Then I have with me bank balance 83,200. Please don't write 83,200 as it is. Bank balance of 83,200 will be there in inner column. Why? When you admit that new partner R, he will bring in some capital. That capital will increase my bank balance. So I would have to keep it in inner column. Then after this balance sheet, let's read the adjustments. He comes in for 1/5 share. I just compute my basic partners profit sharing ratios here. R comes in for 1/4. Sorry, 1/5. R comes in for 1/5 share. When R comes in for 1/5 share, can I say previously before R comes, old ratio was 2 by 5 and 3 by 5 between P and Q. Now, we were cutting it into 5 pieces. P used to take 2, 3 used to Q used to take 3, together 5 pieces done. Now when R comes, out of 5 pieces, R will take 1. So what is left to P and Q together is 4 by 5. Now this 4 by 5 should be shared between P and Q in 2:3 ratio. So P will get 4 by 5 into 2 by 5. 4 2s are 8, 5 5s are 25, 8 by 25. And this is new ratio. This is admission. And Q gets 3 by 5 of 4 by 5. So I'll do 4 by 5 into 3 by 5. And Q will get 4 3s are 12, 12 by 25. So I can't write 8 is to 12 is to 1 as the ratio because R's part is written as 1 by 5. It has denominator of 5. Here these two have denominator of 25. So how do I convert denominator of 5 into 25? Multiply it by 5. If you give denominator 5, numerator also will ask. So please do 1 by 5 into 5 by 5. You will get 5 by 25. So can I say the new profit sharing ratio is 8 is to 12 is to 5. So the old profit sharing ratio 2 is to 3. New profit sharing ratio 8 is to 12 is to 5. This will be very handy in a lot of places. So I'll compute this first. Then what do I have with me? R will bring 80,000 as his share of capital. Now it's time to compute goodwill. Observe, P, Q and R, all of them are there. R brings for 1/5 the share 80,000 as capital. Totally P and Q together 1 by 5, 4 by 5 and R is 1 by 5. Can I say as per PSR, R is bringing in 80,000 towards his capital. So can I say the total capital should be 80,000 into 5 by 1 making it 4 lakh. But what is the actual capital right now which is there? R 80, P and Q 80 and 160. So I would write 80 and 160. 80 plus 80, 160, 160 plus 160, 320. So 320 should have been the capital in the keeping the ratio in which R bought money. But 4 lakh is what we kept in mind when R got. Sorry, 3 lakh 20 is what is the existing capital. But the way in which the ratio was computed and we got money from R, capital should have been 4 lakh. So the difference of 80,000 is hidden goodwill. If R brings 80,000 for 1/5, capital should be 4 lakh, but capital is only 3 lakh 20. The difference of 80,000 is the hidden goodwill. I don't usually like doing it in formula, so I've done it in this way. This 80,000 should be raised. First, goodwill should be debited and credit old partners in old profit sharing ratio. Old is P and Q, 2 by 5 and 3 by 5. 80,000 into 2 by 5, 80,000 into 3 by 5. That will give them credit of 32 and 48. Now I should write it off. Debit new partners in new profit sharing ratio to write it off. 80,000 into 8 is to 12 is to 5. So 8 by 25, 12 by 25, 5 by 25. When you do that, you get 26,000, 25,600 debit, 38,400 debit, and 16,000 debit. So R's column will be 16,000 debit, Q column will be 9,600 credit, P column will be 6,400 credit. So the journal entry is R account debit 2P 2Q. So in R column, it should be debit of 16,000. Before that, I'll write the capital what R will bring 80,000. Then R account should be debited by 16,000 for goodwill. And P and Q should be credited by how much? 6,400 and 9,600 respectively. See here. 6,400 and 9,600 respectively. Done. When I'm crediting P and Q, it's because of R. So I'll write 2R. When I'm debiting R, it's because of P and Q. I'll write 2PQ. I'm done with goodwill adjustment here. So first adjustment, Damar. Come to second one. Partners will not withdraw their goodwill. That so is sorted. General reserve already transferred. Provision at 2%. Okay. How much is debtors in the balance sheet? 48,000. On that, I'll create 2% provision, which is expense. So in revaluation account, I'll write debit side. 2 provision for doubtful debts. 48,000 to 5%, 2,400. Done. Next, this adjustment done. Liability of 1,440 is written back. Written back means reduction in debt creditors. Like how you say written off from debtors, we'll write written back in creditors. Don't add it to creditors. It is reduction in creditors, which is basically income. So I'll write in my revaluation account credit side 1,440. If not for this memorandum revaluation, if I was allowed to change my assets and liabilities balance, 1,440 return back to creditors means from the balance sheet creditors of 57,800, I was supposed to deduct 1,440 and not add. I hope you know this. Then this is done. Then stock shall be written down by 10%. Stock value right now is 54,800. 10% of it 5,480. Reduction in the value of the stock is expense. So in my revaluation, I would write on the debit 54,800 into 10%, 5,480. Then I have with me building is to be revalued at 1 lakh. Right now, what is the value? Right now, 85,000. If I make 85,000 as 1 lakh, there is increase in the value of building. Profit, revaluation account, credit side. So I will write credit side by building. 1 lakh minus 85, 15. Then we have plant at 60,000. What is the value of plant right now? Plant is 55. If I have to make 55,000 worth of plant 60, again increase profit 60 minus 55, 5,000 profit, credit in revaluation. What's after that plant value? Then furniture 24. Furniture at right now this stage is 26,700. I should bring it down to 24, meaning I should write off by 2,700, which is loss or which is expense. I would write on the debit furniture 26,700 minus 24, 2,700 debit. What's after this furniture? Then next item is partners would value the asset at the same value. Done, yeah, everything's done, nothing left. Question is over. Now what do I do? Close memorandum revaluation. First close revaluation, reverse the impact on the assets and liabilities. They again find profit or loss, share it to new partners in new profit sharing ratio, close partners capital, write it to balance sheet, see it tally, and then say fine, take the totals here. So what is the total that you get here? We'd have to find partners capital, that is the profit to be shared. I take 1,440 plus 15 plus 5. This becomes 21,440 minus these items. If you do, you'll get 10,860. This is profit to be shared between old partners in old profit sharing ratio. P and Q in 2 is to 3. So I'll write 10,860 into 2 by 5, 3 by 5. You get 4,344 and 6,516. So I'll write it in my partners capital account credit side. 4,344 and 6,516. This is revaluation. Actually, now you do memorandum revaluation. If you stop here, you have to change your debtors value for provision, stock value, furniture, plant and building for revaluation. But I don't want to change these values. I want to record these assets and liabilities at the same value because the question is asking. So whatever I had debited, I will credit it and reverse. Whatever I had credited, I will debit it and then reverse. Two provision was there. So I would write buy provision for doubtful debts 2,400. I had written two stock. I'll write buy stock, buy furniture 5,480, 2,700. Here, whatever written buy creditors, buy building, buy plant. I'll write two creditors, two building, two plant. Same 1,440, 15 and 5. Now, whatever we got 10,860 balancing figure on the debit, I would get it here on the credit. And this will be now shared not to old partners in old profit sharing ratio, but to new partners in new profit sharing ratio. I would write here by partners capital that 12 is to 8 is to 5 or something. 8 is to 12 is to 5. 8 by 25, 12 by 25, 5 by 25 of 10,860. Sorry. $10,860 into 12 by 25 into 5 by 25. When you do this, you get 3,475, 5,213 and 2,172. In our memorandum revaluation, we written by partners capital. In partners capital, I would end up writing as 2 memorandum revaluation. How much is that? 3,475, 5,213, 2,170. Everything is done. All that I need to do is close my partner's capital account, take the total on the debit. 1,10,744, 2,06,116 and 80. 1,10,744, 2,06,116 and 80. And deduct this, you would get balance carried down as balancing figure, which comes out to be 1,07,269, 2,09,903 and 61,828. These will go to balance sheet and we'll wait to see balance sheet tally. I think I've forgotten to add 80,000 cash to our R's capital to our bank balance. I'll do that, making this 163,200. Then write capital of P, Q and R. How much? 1,07,269, 2,09,903, 61,828. Total them to write the total partners capital as 370. Now take the total. 3 lakh 70 plus 57 800 plus 16 500 comes to 4 lakh 44 300. 85,000 plus 55,000 plus 26,700 plus 48,000 plus 11,600 plus 54 800 plus 163 200 comes to same 4 lakh 44,300. And this is where our balance sheet after after admission of our tallies. Let's now begin solving question 4B from our September 2025 examination of CA Foundation Accounting. This question is from the topic of not-for-profit organization, and they've given us receipts and payment like you can see. And if I come to the end of the question, they've asked us to prepare income and expenditure account as well as balance sheet. Why waste time? Let's begin solving this question. And when I solve, they've asked me to do balance sheet as on 31st of March 25, but I'll also do balance sheet as on 31st of March 2024. You might ask me why. The reason is, if I have to do balance sheet as on 31st March 25, in the balance sheet on the liability side, I would have to write opening capital fund. I would get that opening capital fund only when I close my previous year's balance sheet. Because I don't have access to information of capital fund which is closing of last year, I would end up opening that balance sheet also. Come on, let's start. I would write balance brought down 2 lakh 50. 2 lakh 50 balance brought down in my opening balance sheet as on 31st March 24. I'll write cash and bank balance 2 lakh 50. I have with me subscription of 4 lakh 20 after that. Okay. 4 lakh 20,000 worth of subscription money is received. So in my receipts and payment, it's a receipt. If I open my subscription account on the credit side, I would write by receipts and payment 4 lakh 20. What I want you to know is this 4 lakh 20 of subscription money received might not completely relate to current year. The part of this 4 lakh 20 might be the outstanding of previous year received now, and a part of this 4 lakh 20 can be the money which is pre-received for the next year in advance. Next, I have with me donation for match fund 55,000. What you have to observe is, along with this, I also have sale of match tickets 20 and match expenses 1 lakh 10. So I have received 55,000 donation from sponsors. I have got 20,000 by sale of tickets. So putting it together, I got 75,000 rupees towards the match. And to conduct the match, I've incurred 1 lakh 10,000 as expense. 55 donation received, 20 from sale of match tickets. Together, I got 75,000. I should have conducted the match with 75,000 rupees, but I've spent 1 lakh 10,000 on the match. So 75 minus 1 lakh 10, whatever is the difference, that is the total amount of loss that I've incurred because of me. So let me show you how it's done. So I'll take you all to my balance sheet. In the balance sheet, I would write match fund. How much is the match fund? Do we have any existing balance of match fund? Do we have any existing balance of match? Oh, there was some opening balance of match fund 30,000. This was money collected last year for the match to be conducted this year. So in my previous year balance sheet, I would write match fund 30. Previous year I had 30,000 worth of match fund. In the current year, there is opening balance of 30. This 30 was collected last year to conduct the match this year. I have further collected donation of 55. Together it becomes 85,000 funds available. Using this, I have conducted the match spending 1 lakh 10. So the difference whatever is there, no, 25,000, which is minus. If this was positive, let's say it was 5,000 positive, I would have told balance of 5,000 match fund carried forward to next year. But we have minus 25, meaning this is the excess of income over expense. I would write it on the expense side of my income and expenditure account. I'll repeat. Last year, we have collected 30,000 rupees as donation to conduct the match this year. This year, we further collected 55,000 for conducting the match. Together, we have 85,000 rupees to conduct the match. Using that, we conducted the match but ended up spending 1 lakh 10,000 for the match. So 25,000 which is spent more than the fund available will become loss. It will be shown in our income and expenditure account as expense. I would write here to match expenses 25. Are you getting it? If we had some surplus funds left, I would have not written as income here, but I would have shown it as a match fund in my balance sheet. Alternatively, you could have written this match expense on the expense side, sale of tickets on the income side and all that. Anyways, I have not written sale of tickets income here. Sale of ticket I'll write here separately. By sale of match tickets, I'll write here 20 separately. Or you can net it off and then write only match expenses 5,000. That is also absolutely fine. or we can rename it as loss from match 25,000. You could have taken this 20,000 as an addition to this year. 30 match fund, 55 donation plus 20 making it 105. 1,10,000 is expenses, only 5,000 is loss. Then I would have written 5 years. Instead of writing 5,000, 25,000 expense and 20,000 income, I could have written expense of 5. Everything's right. Your income over expense or expense over income, whatever will come in match in both the cases, impact on the balance sheet is going to be absolutely same. Let's wait and see how the suggested answer will be, but you will be awarded full marks if you do it this way or if you do it that way. Then next item, what I have is entrance fees of 85,000. Entrance fees can be either capitalized or can be taken to PL. They might have given some adjustment. There is some adjustment to capitalize 50%. So what will I do anyways? I would write my income entrance fee in the inner column. And then I'll deduct 50% of it, which is supposed to be capitalized. So I'll take only 42,500 to my income and expenditure income. 42,500 which is to be capitalized. I can either add it to capital fund or I can write it here separately. Either ways it's the same. There's going to be no impact. Sorry, I skipped the protocol and I came back to adjustment. I got slightly carried away. I should have stuck to the order. Fine. Anyways, we're done with debit items here, receipts. Now we'll go to credit items, basically payments. Salaries and wages are paid to the extent of 1,65,000. So if it is paid, it's an expense. I would write here 2 salaries and wages, 1,65,000. I think there is an adjustment. So I would, once again, there is an adjustment for salaries and wages. Salaries and wages. Outstanding 40,000 for the year ended so and so. Okay, instead what I'll do, I can open one ledger. If you want, you can write it in the inner column and only add, but I prefer opening a ledger. So in receipts and payment, they've written by salaries and wages. So in salaries and wages, I would write 2 receipts and payment. I have paid 1,65,000. I've written the same thing, the same way it's given here. Then I have with me office expenses 35. There is no adjustment for office expenses. So I would write here to office expenses 35. Then I have telephone charges 28. I would write telephone charges 28. It is paid expense, paid payment expense, income and expenditure debit. Electricity charges 32. I would write electricity charges or electricity expenses 32,000. Then we have sports equipment bought to the extent of 2,50,000. Don't write this in your income and expenditure as expense. This is an asset. So I would write it in my balance sheet as an asset. In the balance sheet, I would have to leave little space for cash and bank, which we'll write later. I would write sports equipment of 2,50,000. But why am I writing this in the inner column? This is because maybe we would have to do depreciation on this before we post it to our outer column. What do we have after sports equipment of 2,50,000? There is traveling and conveyance of 65, which is again an expense. I would write it in my income and expense on the expense side. Traveling and expense, traveling and conveyance 65,000. Then I have balance carried on 1,45,000. This is the closing balance of receipts and payment asset. Balance sheet I would write 1,45,000. I'm done with the entire receipts and payment account now. I'll move on to adjustments. Subscriptions include 40,000 received for the year ended 31st of March 2024. So 40,000 rupees received is for year ended 2024. That is previous year. See, in my subscription account, I have written 420. In this 4,20,000, 40,000 is received for previous year. Previous year subscription money, if it is received in this year, can I say it was outstanding in the previous year? Money that I have earned but I have not received, which is my asset, I have received now. So I would write it as an asset opening balance. In the subscription account, I'll write to balance brought down from 2023-24. Subscription which is accrued but not received. 40 which is received now. And this 40 is my asset. So in my opening balance sheet, I would write accrued subscription 40. I hope everybody got this. And out of 4,20,000, after you deduct 40, whatever you got, it need not be completely for 24-25. Maybe a part of it is for 25-26 also. I agree, 4,20,000 is received in this year. I agree, out of that 40,000 is of previous year because it's given in question. Balance 3,80,000 might not be current year subscription money received. It might include some money received in advance for next year. Let's deal with it later. Then after that, they've told on 31st of March 2025, current year closing. Due but not received is 25,000. This is current year subscription money which is accrued and due but not received. So closing balance of the asset, I would write balance carried down. How much of the subscription money for year 24-25 is not yet received? 25,000. So this will become my closing accrued subscription, which is my asset. I would not write it in my opening balance sheet, but in my closing balance sheet, I will write it as accrued subscription 25,000. Write it now so that you won't forget later. Then advance subscription received for the year ending 31st of March 2025, but pertaining to year 25-26 is 35,000. There you go. Out of this 4 lakh 20 what is received, 40,000 is previous year money received. Just now they told 35,000 is actually received for next year. When I write that 35,000 is received for next year, that would be my closing liability. Pre-received subscription for next year, 35. This is a liability on the closing date. I would write this not in my opening balance sheet, but in my closing balance sheet on the liability side. I would write this as pre-received subscription 35,000. What do we have after that? Subscriptions received in advance for the year ended 31st of March 2024 include 14,000 pertaining to year 24-25. Subscriptions received in advance for the year ended 31st of March 2024. 31st of March 2024, we have some pre-received subscription previous year. For 24-25, the amount which was pre-received is 14,000. So the money which was received last year, but it actually pertains to current year is 14,000. This is my opening liability. In the opening balance sheet, on the liability side, I'll write pre-received subscription 14,000. Once I'm done with this, I can close my rest of the subscription account with ease. From 4 lakh 20, if I deduct 40 and 35, I'll get the subscription received in the current year for current year. If I take 24-25 here, 24-25 here, 24-25 here, I will get to know how much is the current year subscription income, which will go to my income and expense. Quite easy. I have received 4 lakh 20 in the current year. In that 40,000 is previous year's accrued. Sorry, previous year's accrued. 35,000 is pre-received for next year. Take 4 lakh 20 and deduct 40 and 35. That is basically 75. You get 3 lakh 45. 3 lakh 45,000 is the received amount in the current year for current year. Along with that 3 lakh 45, if I add 14,000 which was pre-received in the last year and 25,000 which is outstanding to be received next year, I would get my current year subscription income as 345 plus 14, 349, 359, 359, 384 to be my subscription income for the year. If you total, it will also match. And this 3,84,000 is income by way of subscription. In my subscription account, I would write credit side in my income and expenditure account, I'll write credit side by subscription 3,84,000. What's after the first adjustment? Then second adjustment, match fund already taken care of. Outstanding wages 40,000. Okay, outstanding wages 40,000. Have I opened one separate ledger? Yeah. Outstanding wages means liability. On the credit side, I'll write liability. Am I right? Oh, for the year ended. This is closing liability. So debit side to balance carried now 40. Opening liability credit side, closing liability debit side. Liability closing balance I wrote on the debit side 40,000 and 2,05,000 is the expense for the year. Instead of doing this ledger, you could have written that in the inner column and then added as well. That's also absolutely fine. 1,16,000 inner column, add 45,000, that will make it 2,05,000. Next, what do we have after that? Once again, outstanding wages should go to balance sheet liability. I forgot. Outstanding wages and salary, closing balance sheet, liability 40,000. Then I have with me depreciation on sports equipment by 25%. Come on, we have sports equipment at 2,50,000. I would do depreciation by 25%, which comes to 62,500. If I deduct the same, it becomes 1,87,500. And this 62,500 of depreciation is an expense. In income and expenditure account, I'll write on the expense depreciation on sports equipment 62,500 rupees. What's after this? Then we have capitalized 50%. That too, anyways, we've done. Everything's done here. We'll just see close one ledger at a time. Subscription account already closed. Salaries and wages done. This is an easy, cute little question here. Close our income and expenditure. Identify excess of income over expense or expense over income. I think there are more expenses than income. I will write the total year as 450 to 500, deduct it from this to find my expense over income as 6,000, which is loss or deficit. This has to be deducted from my capital fund, which I don't know yet. To this capital fund, I will deduct deficit of 6,000. How do I get this capital fund? Very simple. I'll close my opening balance sheet. 250 plus 40, 290. 290 minus 44, I would get capital fund as 2,46,000. This 2,46,000 I would write here, deduct 6,000 deficit, I'll get 2,40,000. Simple, take the total 240 plus 42 500 plus 40 plus 35, 357,500. 1,45,000 plus 1,87,500 plus 25,000 is again 3,57,500. We're done with our balance sheet as on 31st March 2025 along with income and expenditure which has been asked in this question. Let's now start with question 5A1, the one which had internal choice. This question is from September 2025 CA Foundation Examination of Accounting, and this is on bank reconciliation statement. Quite unexpected for a lot of people. They've asked amended cash book. I'll tell you, expect the unexpected. Don't go with any expectation to examination hall. Amended cash book is not anything different. It is basically rectification of errors done before preparation of bank reconciliation statement. Let's begin. From the following information supplied to Mr. D, prepare bank reconciliation statement on 31st March 25 after amending the cash book. Usually, whenever we would have to do BRS, a lot of you will think we can start with passbook, end at cash book, or we can start with cash book and end at passbook. But the right way of preparation of BRS is always we have to start with balance as per cash book and end with balance as per passbook. But in some questions, they would not give us the balance as per cash book to start with. Only when they've not given balance as per cash book, we have to start with balance as per passbook. In this question, they've asked us to do amended cash book. Amended cash book means what? See, whenever there is difference between cash book and passbook, among those differences can be some errors in cash book. Error should not come in reconciliation. Error is part of rectification. So we would have to prepare amended cash book. Basically, cash book opened once again. Write the balance as per cash book what is given. Do all the error rectification. Find the corrected cash book balance. Using that, we should do BRS. And that BRS is after the amendment of cash book, where only genuine differences between cash book and passbook will come and there will be no errors. Are you getting it? But the unique part about this question from September 25 exam is they want us to do amended cash book, but they have not given balance as per cash book. If anyone started doing amended cash book with balance as per passbook, gone. The moment you looked at this question, the moment you started it this way, you will be gone. So you should have had basic fundamental knowledge of BRS and not just plus minus minus plus minus, do this and then practice. What should we do? First we prepare bank reconciliation statement starting with balance as per passbook. At the end we will find balance as per cash book. That balance as per cash book should be taken as opening balance in amended cash book. And then we'll do amended cash book comprising of all the errors. After that, starting with that balance as per amended cash book, we will do BRS. We will start with balance as per amended cash book, end with balance as per passbook. So though it is not mentioned in the question, you had to do BRS before amended cash book, amended cash book, and BRS after amended cash book. Usually when kids prepare at home, they do only amended cash book or they do only BRS. But if you remember, when we practiced throughout, we always did BRS before amended cash book, and BRS after amended cash book. That's what will give us good edge over these kind of problems. And even when usually people suffer and cry saying that this is such an irritating question, it is irritating because you have never done something like this before exam. This will become comfortable only when you've done something like this before exam. Let's begin. We'll start with bank overdraft as per bank statement 20. So this is BRS before amended cash book. Bank balance as per passbook minus 20,000. Now let's read one adjustment at a time. Check issued but not presented. This P is passbook. This is C, my cash book. When the check is issued, cash book decreased. It is not yet presented for payment, so passbook has not decreased. Cash book has decreased. Passbook has not decreased. We are making changes in this case in past. So what is it that I should do? I should reduce my passbook balance by 11,000. Shall I do minus 11,000? Let me write here minus 11,000. The next thing that I have is checks recorded in bank column of the cash book but not sent to bank for collection. Shabash. We've received check. We wrote it in the cash book. When we wrote it in the cash book, balance as per cash book increased. But passbook balance jastine ಆಗ್ತಲ್ಲ. It's not increasing. Why? Because we have forgotten to send the check to bank. Bank balance will increase when the check is sent. Check is not sent. Cash book is increased. Passbook has not increased. Where are we making changes? Passbook. What do I do? Add. How much? 3,000. So I would add. Checks received but not sent to bank. 3,000. What is after that? Then come to next one. Fourth adjustment. Payment received from customer directly by the bank. This is like direct deposit by customer into bank account. Our customer has directly deposited the money into bank, because of which our passbook balance has increased. But in cash book, I have not written entry. Passbook has increased, cash book, there is no entry. We are making changes in passbook. What do I do? Minus. How much should I deduct? 6,000. So I'll write here less 6,000. Next item. Bank charges debited in bank statement 40. This has been omitted to be recorded in cash book. So bank charges have been recorded in passbook. Passbook balance decreased. But it's not recorded in cash book. Cash book balance is not decreased. So where are we making changes? We're making changes in passbook. So what should I do? It is previously deducted. Now I will add back to find cash book balance. I would add 40. I hope everyone understood. Then I have with me checks deposited with bank but not collected. I have deposited the checks with banker. When I deposited it, I've increased my cash book balance. Because these have not yet been collected by the banker, my passbook balance has not increased. So cash book balance has increased, passbook balance has not. Where are we making changes? We're making changes in passbook. What would I do? I would add. How much would I add? 9,000. I would say add checks deposited but not cleared 9,000. What do we have next? We have next bill for rupees 5,000. Discounted with banker for 4,960 in February. Dishonored. Oops. The moment the bill is dishonored, banker will take money from my account. He wouldn't just take 4,960 discounted proceeds. He will take full 5,000. Along with that, he will also take noting charges of 20. So can I say banker will deduct 5,020 from my passbook, but I have not written the entry, so cash book balance has not gone down. Banker has reduced 5,000 for the bill, 20 rupees for noting charges, 5,020. I have not yet recorded it in my cash book. My cash book balance has not gone down. Passbook has gone down by 5,020. Cash book is not. We're making changes in passbook. Add. How much do I add? 5,020. Bills dishonored and noting charges recorded in passbook only. Then what do I have with me? Premium of life insurance policy. So life insurance policy of D paid by the bank on his advice 350. So standing instructions have been given to banker to make the payment. Payment is made. Because the payment is made, passbook has decreased. Entry is not made in cash book. Cash book has not decreased. Passbook has decreased. Cash book has not. We're making changes in passbook. I will add 350. I will add 350. I hope everyone gets this. Then after this, overdraft balance credit, that is negative balance, as on 15th of March is 14, was carried over as debit the next day. Aiyah. It is minus 14. I should have written as minus 14. I wrote it as plus 14. If I write minus 14 as plus 14, I've increased my cash book balance. By how much? 14,000. Double 28. I should have written minus 14. I've written plus 14. Minus 14 plus 14 difference is 28. Minus 14, if you do plus 14, it will become 0. Again, if you do plus 14, it will become 28. I was supposed to take left turn and then go 14 kilometers. By mistake, I took right turn and went 14 kilometers. Now I would have to take a U-turn and come 28 kilometers. So I should have written 14,000 credit. I have wrongly written 14,000 debit. I have wrongly increased my balance as per cash book by 28. Making changes in passbook. I'll add 28. I would add 28. If I do all these adjustments, I'll get balance as per cash book. Why did I do this BRS before amended cash book? Is it because they've asked? No. The objective of doing this was charger change. Okay. The objective of doing this was only to find balance as per cash book, so that we can do amended cash book. Find how much is the balance as per cash book. Minus 20, minus 11, plus 3, minus 6, plus 40, plus 9,000, plus 5,020, plus 350, plus 28,000, 8,410. This becomes my balance as per cash book. And this will be the starting point when I prepare my amended cash book. In my amended cash book, I would write to balance brought down 8,410. And here I'll find the balance as per amended cash book. That will become the starting point for amended cash book. Now, among these differences, whatever are temporary timing differences will appear in amended cash book. Whatever are errors which need rectification will come in amended cash book. Got it? So let's see one item at a time. Checks issued but not presented. Checks issued but not presented is a timing difference. It's not an error. Over a period of time, it will get rectified. But it is minus because we started with passbook balance. In BRS, after amended cash book, it will be add. Or I'll tell you in the language that you understand. We'll start with one item at a time. We'll do aram se one only. Checks issued but not presented for payment. When the check is issued, cash book balance has decreased. It's not presented for payment. Passbook has not decreased. We're making changes in cash book this time. So what should I do? I should add. I'll add 11,000 in my amended cash book. Why is this not? Sorry, I'll add 11,000 in my BRS after amended cash book. Why is this not coming in amended cash book? Because this is a timing difference. This is not an error to be rectified. Next, checks recorded in the bank column of the cash book but not sent to bank. Check has been recorded in the bank column of cash book. Cash book has increased. Passbook is not. We're making changes in cash book. I would have to reduce. And this is timing difference. Over a period of time, the check will go on, it will get cleared. There is nothing error in cash book. In the cash book, you've entered it correctly. It is just that it is not sent. It will be sent for collection. Passbook will increase. Timing difference to appear in BRS. So in BRS, I'll write it as cash book I would have to reduce. Less 3,000. Then next, I have with me payment received from customer directly by the bank 6,000. So my bank has directly received 6,000. Passbook has gone up. I have not entered in cash book. I have to enter. Is this reconciliation? No. This is a rectification item. Error. Error of complete omission. My customer paid 6. I should write no. I have not written. It should not come in BRS. It will come in my amended cash book. It's a cash book receipt. I would write cash account debit to debtors 6,000. My debtor has paid me money. I have failed to record. I'll record me. Next, bank charges debited in the statement 40. Banker has charged 40 rupees for me in my passbook, which has gone down. In the cash book, I have not entered. I'm supposed to enter. It's an error if I don't enter. So what will I do? I will write it in my cash book as payment. I'll write in my cash book as payment, bank charges 40. What do we have after this? Checks deposited with bank but not collected 9,000. Check has been deposited with bank. So bank balance has increased. But check has been deposited. Okay, I've deposited with bank. My cash balance has increased. Cash book balance has increased. Passbook balance has not. Eventually it will increase. This is not an error. This is not a rectification item. This is a reconciliation item. Timing difference. 9,000 I would have to reduce from my cash book in BRS. In BRS, after amended cash book, I'll write less. Checks deposited but not cleared, 9,000. After this, what do I have next? A bill of rupees 5,000. Okay, 5,000 rupees bill dishonored, 20 rupees noting charges. Together it is charged by the banker. My passbook has gone down by 5,020. In my cash book, I haven't recorded. I have to record. If I don't record, it is not reconciliation. It is rectification of errors. Error of complete omission. It's payment of 5,000 rupees 20. 5,020 in my amended cash book. Bill dishonored 5,000. Noting charges 20. I've paid but I've not recorded. I've recorded now. Rectifying the error. Premium of life insurance policy 350. It is insurance premium paid. My passbook balance has already decreased. My cash book balance has not decreased. This is an error of complete omission which I have to record in my cash book, which I have not recorded so far. Now I'll record it by crediting in my amended cash book. Drawings, that is personal life insurance of the proprietor paid 350. Then overdraft balance by mistake, yeah, it was supposed to be minus 14. I've written as plus 14. So 28,000 I've increased my cash book incorrectly. It's an error in cash book. I would have to rectify it in cash book by reducing it by 28,000. Error in cash book, rectification, credit, wrong debit 28,000. By this, we are done with the entire thing. Cute, sweet little question. Identify the balance in amended cash book. Write it here. You would get balance as per passbook here. This should match with the passbook balance what was given in the question minus 20. If it matches, what we've done is correct. If not, something wrong. Observe. What do we have here? Take the total 28 plus 350 plus 20 plus 5000 plus 40. Credit side it's more. 33,410. If you deduct, you will get balance as negative. Something missing. Okay, this is all fine. I'll write balance carried on 19,000. There is overdraft balance in cash book. Basically minus 19. I would start with minus 19 in BRS after amended cash book. To minus 19 plus 11 minus 3 minus 9. You would get minus 20,000 as the balance, not as per cash book. Sorry. As the passbook. This minus 20 is actually given in the question. That's what we started our answer with. We end there, it's all right. So you had to prepare BRS before amended cash book, as well as BRS after amended cash book to get this answer right. And any of the videos that we posted in the past, though they ask only part of it, I anyway solved all three so that we were mentally preparing for this day. And I think hopefully you people would have cracked this and then got this right. Let's now discuss solution to question 5A2 from our September 2025 CA Foundation accounting paper. 5A2 had an internal choice. Basically, you had to pick between 5A1 or 5A2. 5A2 was from bills of exchange. They want us to pass journal entries in the books of Q. So we are actually representing Q in this case. Who am I? Q. P owed rupees 2 lakh to Q. So for this is a liability in the books of P, asset in the books of Q. For this, there will be no journal entry. This is an opening balance. As a Q, as a person representing Q, I have a receivable of 2 lakh from P. For this, there is no journal entry. On 1st of October 2024, P accepted a bill drawn by Q for the due amount for 3 months. So I drew a bill on P. P accepted it and sent it to me. So to P, it is bills payable. To Q, it is bills receivable. So bills receivable is an asset increasing. I would debit bills receivable account on 1st of October for 2 lakh and I would credit P account because P was my asset but now no longer an asset. Decrease in the asset, P credit. Increase in the asset, bills receivable debit. What do we have after this? Q got the bill discounted with the banker for 1,98,000 on 3rd of October 2024. I didn't keep the bill with me. I went to the banker, I gave the bill and I told the banker, banker, please give me money. Banker gave me 1,98,000. So bill receivable of 2 lakh is going out credit. Banker gave me money 1,98,000, increase in bank balance debit. Difference of 2,000 what I let go because the banker has to wait till the maturity date, that's 3 months later. It is my discounting charges. So expenses has to be debited. Bank account debit to the extent money received 1,98,000 is happening on 3rd October. Bills receivable credit because bill worth 2 lakh is going out. 2,000 rupees being my expense, it will be debited to discounting charges. And this is the accounting entry to be passed on 3rd October. What do we have after this 3rd October transaction? On 31st December, from 1st October, if it is 3 months, 1st November, 1st December, 1st January. 1st January, the bill is due. 1 day before the bill is due, see what's happening. On 31st December 2024, before the due date, P approached Q for renewal of the bill. P came to me and then told, hey, sorry, I don't have money. Tomorrow, banker will come and then collect money from me. Please, you pay the banker on my behalf. We will enter into a new bill. So this is what P is giving to me an offer. Q agreed. Ayyo, Q agreed. So when I agree, I don't have the bill with me, no, to give it back to P or tear it. It's with banker. I have to pay banker 2 lakh rupees, not even 1,98,000. I have to pay the banker 2 lakh rupees and get the bill back from the banker. Only then I'll be able to give it to P. So first, let's pay the banker. I will credit bank account 2 lakh rupees and I'll debit bills receivable because I'm going to receive this bill back from the banker. Now I am ready to give it back to P. Now when I give this bill back to P, my bills receivable will go to the extent of 2 lakh and now P has to pay me 2 lakh rupees. It's happening on the same date. Now, what are the terms on which I am accepting to give this bill back to P? On the condition, okay? What is the condition? On the condition that 1 lakh rupees along with interest of 12% per annum for 3 months on the amount of 1 lakh will be paid by P. Okay, and P will accept a new bill for the balance. Let's break it into two parts. Now, P is supposed to pay me 2 lakh rupees. He's telling that he wants renewal. He will pay it 3 months later. I've agreed to it, but not for the full amount. I've agreed that you can pay later, but you have to pay 1 lakh rupees immediately, and you have to pay me 2 lakh rupees immediately, but you're paying only 1 lakh. So 1 lakh you are delaying. For the delayed 1 lakh, where we sign a new bill, I'm receiving it 3 months late. So Q is charging P interest at 12% for those 3 months. I'll repeat. I am Q. P has to pay me 2 lakh because the 3 months time is over. Q is saying he will pay 3 months later. So P is telling that he will pay 3 months later. Q has to wait for 3 months. So Q is asking you pay me later, but pay me interest also for that. Then P told he will not pay full amount late. He will pay 1 lakh now and 1 lakh later. So what is the delay? For 1 lakh for 3 months at 12%, 1 lakh into 12% into 3 months. How much of interest is there? So much interest he pays me now. So to Q, it is income. So interest income will be credited. Q have to collect 2 lakh rupees from P for the bill, and for 1 lakh which is delaying, I will collect interest at 12% for 3 months, 3000. So totally P has to pay me 2 lakh 3. Out of 2 lakh 3, for 1 lakh he will sign a new bill. For 1 lakh 3000, he will give it to me in cash right now. I am receiving cash account or bank account debit 1 lakh 3000. 1 lakh rupees amount plus 3000 interest. And for the balance 1 lakh, he will give me a new bill that will be bills receivable debit. Credit will be P account for 2 lakh 3. This is the entry. Let's see what have they mentioned here. Same thing. And P would accept a new bill for 3 months for the balance amount. These arrangements were carried out on 2nd of January 2025. So when did this agreement happen? 2nd of January. 2nd of January 2025, this transaction happened. And we agreed. We have executed it rightly, comfortably. What's happening after that? These arrangements were carried out on 2nd January 2025. From there, 3 months, 2nd February, 2nd March, 2nd April. So 2nd April, that 1 lakh rupees bill will mature. However, on 2nd April, before the due date, P became insolvent and only 40% of the bill amount could be recovered. So P became bad boy or bad girl, and he could give me only 40%. How much am I supposed to collect from P? I'm supposed to collect from P 1 lakh rupees. Oops. How much will I end up collecting from P in that case? Let me write the entry on 2nd of April 2025. If P pays the money, I will take it. There is bills receivable dishonored. So that bill, whatever is there with me, I will throw it back on P's face. So I'll write credit bills receivable account. Debit will be P's account. Now how much is P supposed to pay me? That bill of 1 lakh. 1 lakh. 1 lakh is what is supposed to pay. So narration is being dishonored recorded. The bill is dishonored in this case, and I have recorded that bill dishonored. And is going to pay me cash or pay me money. I would write bank account debit, but is not able to pay full money. Is able to pay only 40% of it. I would write 1 lakh into 40%. 40,000 I would receive. Whatever I don't receive will become bad debt. Right? Bad debt account debit rupees count 60,000 1 lakh being a part consideration received and balance written off as bad debt. By this, we are done with this bills of exchange questions solution. Tada! Okay, date I can put it here. 2nd of April. Is there anything else in the left in the question? No, that's it. There was a problem when I downloaded the question paper from ICAI website. This page was folded. I couldn't see the question, so I copied it from elsewhere. I typed it here, and then I'm solving this question. So this is solution to 5A2 from bills of exchange. Let's now solve question 5B from our September 2025 CA Foundation accounting paper. This question is from final accounts of sole proprietor with manufacturing account being required in the question. So this is of that second unit, manufacturing entity. The question in the question paper uploaded on the institute's website has an overlap and it's not visible. So I had to type it down to start. I hope you're okay with that. Come on, let's begin. Mr. Sahil runs a factory which produces sugar. Following details are available in respect of his manufacturing activities for the year ended 31st March 2025. You are required to prepare Mr. Sahil's manufacturing account. Very simple. On the debit side, you write opening WIP, credit side, closing WIP. Below the opening WIP, you will write consumption of raw material, which is opening raw material plus purchase of raw material minus closing raw material. Any manufacturing expense will be debited. On the credit, we'll write sale of scrap if there is any. We'll find the balancing figure as the cost of producing finished goods, which is transferred from manufacturing to trading. That's it. Opening WIP 15 tons is 4,50,000. I would write it exactly the same way. Opening WIP is 4,50,000. Then I have with me closing WIP is 3,60,000. I would write this on the credit as closing WIP 3,60,000. After that, I have with me raw material consumed 32 lakh. I don't have to do opening plus purchase minus closing. They themselves have told 32 lakh. Makes my life so simple. I would write consumption of raw material 32 lakh rupees. What do I have after that? Closing inventory of raw material. I am ignoring it. Higher charges, which is 200 per ton produced. Okay. So we need to know how many tons were actually produced for this. And direct wages also, it is contracted 400 per ton manufactured, 200 per ton of closing WIP. I can write my higher charges and direct wages in here. But the problem is I can't compute the amount because I don't know how many units were manufactured. For finished goods and WIP, direct wages are separate or different. What do I have after that? Factory rent of 2,40,000. This is quite simple to write. I would write factory rent of 2,40,000 easily. Then I have with me repairs and maintenance of plant. I can write that also very easy. I would write repairs and maintenance of plant and machinery as my expense to the extent of 1,50,000. Then what's the last piece of information? Sugar produced 500 tons. There we go. We have it. 500 tons is produced. For each ton, 200 is higher charges. So I would write higher charges 500 tons into 200 per ton, 1 lakh. And finished goods manufactured 500 tons and higher charges, direct wages is 400 per ton manufactured. 400 per ton into 500 tons. That gives me 2 lakh. And for WIP, we know the units. WIP is 12 tons. And for 12 tons, I will take 200 rupees per ton as my direct wages. 200 per ton into 12 tons, 2,400. Put them together, 2,02,400 is direct wages. I have with me sale of scrap 84. In manufacturing account credit side, I'll write sale of scrap 84. So all that I need to do is take the total on the debit, write it on the credit, identify the cost of goods manufactured and transferred to trading account as balancing figure, which comes to 38,98,400 rupees. Let's now begin question number 5C from our CA Foundation September 2025 counting paper. This question is from company accounts. They've given authorized capital, equity, preference, and everything. Let's come to the end. They've asked us to pass journal entries for affecting the above transactions. Working note should form part of the answer. Okay, we'll do that. Looks like this bit of data is dump of the balance sheet given here. Look at this. Company has decided to redeem cumulative preference shares at 10% premium. So the company is basically redeeming preference shares. Instead of giving balance sheet from here to here, basically this entire block, They have given us the details of assets, liabilities that extract of balance sheet, not in the form of a table, but in the form of a paragraph. It's slightly confusing. Let's not waste time and energy on that. Quickly come here. Company has decided to redeem cumulative preference shares. Okay, let's do that. Partly by issuing equity shares of face value 1,50,000 at premium, and partly by selling investments. Fine, let's do that. First, shall we issue equity shares? How many equity shares are issued? Face value 1,50,000 at a premium of 10%. Can I say 1,50,000 plus 10% is 1,65,000 is what I'll collect, but I'll give equity shares of 1,50,000 rupees only. I would write bank account debit. This will be 1,50,000 plus 10% premium, making it 1,65,000. And I would credit my equity share capital to the extent of 1,50,000 only. 15,000 extra what's collected will be credited to security premium. I'll repeat, nominal value of the shares issued is 1,50,000. I've collected 10% premium on that, making it 1,65,000. That 10% premium is 15,000 rupees. And the complete funding for redemption of preference shares is not happening by issue of fresh equity shares. We're also selling some investment. How much investments are we selling? Investments are sold at 110% of their face value. So obviously the 10% extra might become profit. But remember, they have not told book value. They have told face value, which means nominal value. Face value, nominal value are same. But this face value and cost might not be same. So be careful there. Let's see the investment value. How much is investments? Paid up capital cumulative. Company has investments of face value 40, but carrying at the books at 45,000. 45,000 is cost, 40,000 is nominal value. When I credit investment, I should credit to the extent of 45,000 because the cost is 45. But when I debit bank, money that I'm getting is not 45,000 plus 10%. It is not 45,000 into 110%. It is 40,000, which is my face value. It is my 40,000 into 10% or 40,000 into 110%, which makes it 44. So 44,000 is the money that I get. 45,000 is the investment value. 1,000 less that I receive will be lost. This is not very tricky, but good enough for someone to mess up in the exam. I really hope that you got this part right and not messed this up. Okay. So 1,000 rupees is lost. Let this be this way. Then what do we have after that? All preference shareholders have been paid off except two shareholders holding 500 shares. Maybe some problem, we have not paid them. How many preference shares do we have? Ignore the authorized capital, come to paid up. Paid up capital. Cumulative paid up capital is shares of 100 each and amount is 3 lakh. Good. I will debit preference share capital. 10% redeemable preference share capital 3 lakh. And I'm supposed to redeem them at par or premium. Any information? To be redeemed at premium. To be redeemed at 10% premium. So I'll pay premium on this 3 lakh, which is 30,000. That will be debited to premium on redemption of preference shares account. And this will be credited to preference shareholder because that's the person to whom I'm supposed to pay. Understood that? And 3 lakh rupees is made out of how many shares? Each share is of rupees 100. When each share is of rupees 100, can I say it is 3,000 shares of rupees 100? Why am I writing this? This is going to be making my next entry simpler because one shareholder who holds 500 shares or two shareholders who are holding 500 shares together, they have been not paid. So when I later debit preference share holder account and credit bank, I'll not be paying full 3 lakh 30. I'll be paying 2,500 shares because 500 shareholders I did not pay. 3,000 minus 500. Those shareholders, nominal value is 100. I'm paying them 10% premium, 110. 3,000 minus 500, 2,500 into 110. I'm paying them 2,75,000. How much am I paying them? 2,75,000. What's after paying preference shareholders that I have? That's it, nothing else. Now the two things that I should do: one, premium I would have to transfer to P&L. Next one, I have to create CRR. Premium I'll transfer to PL by rating profit and loss account debit to premium on redemption of preference shares 30. Next one, I have to create CRR. CRR is created to ensure that the capital of the company doesn't decrease. When I redeem preference share capital, my capital is reducing by 3 lakh. And I also issued equity shares, then my capital is increasing by 1 lakh 50. When I redeem preference shares, preference share capital is reducing by 3 lakh. To substantiate that, I've issued equity shares of 1 lakh 50. So net decrease in the capital is not full 3 lakh, only 1 lakh 50. So I'll create CRR to the extent of 1 lakh 50, which is 3 lakh minus 1 lakh 50. What reserve do I have to create? I have P&L and general reserve. I'll use general reserve anyways, because P&L, no, part of it is utilized to pay this premium and part of it is anyways gone in this loss. I'll have about 31,000 if I deduct, I'll have about 49,000. Let's not touch that. We can take general reserve in peace. That's it. This is being CRR created in compliance with section 69 subsection 1 of Companies Act 2013. And there we have it. We have successfully completed question 5C from September 25 accounting paper on redemption of preference shares. Let's now solve question 6A from our September 2025 CA Foundation accounting paper. This question 6A is from company accounts topic, and this is on issue, forfeiture and reissue along with pro rata allotment with calls in advance and calls in arrears. Good question. They have not given any information of dates, so there is no concept of interest on calls in advance and interest on calls in arrears. They want us to pass necessary journal entries and entries in cash book. Basically, they want us to prepare cash book. If you would have done it, good. If not, I think entries in cash book means they want us to show the accounting entry involving bank account also. Fine. Let's get started. ABC Limited had issued 1,20,000 equity shares of rupees 10 each at a premium of 2. So basically 12 rupees becomes the issue price, 10 rupees is nominal value. Every piece of information is important and you will not be able to write journal entry straight away upfront. You have to do a lot of working. If not, you will be counting too many numbers when you're writing accounting entries. So like I mentioned, nominal value is 10, premium is 2, together 12 rupees is the price at which these shares are issued. They have called for 1,20,000 applications like how it's mentioned in the question. What's happening after that? On application, we are collecting 2 rupees. On allotment, we are collecting 5. And in 5, there is premium included. And on first call 2 and on final call 3. Let's make a note of that. On application, you are collecting 2 rupees. And on application, you are collecting 2 rupees. On allotment, you are collecting 5. Allotment 5 includes the premium of 2. So nominal value on allotment stage will become 3. And on first call it is 2, on final call it is 3. First call 2, final call 3. So 2 plus 5 plus 2 plus 3 is 12. 3 rupees nominal value is on allotment stage and 2 rupees premium is on allotment stage. So application stage, 2 rupees is nominal value. First call, 2 rupees nominal value. Final call, 3 rupees nominal value. I've written all the data that's given in the question. Applications have been received for 1,80,000 shares. So there is pro rata allotment which has to be made, or some major chunk of applications have to be rejected. They've received 1,80,000 applications, but they have called only for 1,20,000 applications. What is the company doing? Allotment has been made on pro rata basis for 1,44,000 shares. So 1,44,000 applications have been accepted out of 1,80,000. So 1,80,000 applicants have applied. In that 1,44,000 is accepted. Difference of 180 and 144, 36 are rejected. And out of this 1,44,000 applications which are accepted, not everyone gets the same number of shares that they've applied for. For 1,44,000 applications, allotment is 1,20,000. Basically, there is proportionate or pro rata allotment. So applied 1,44,000, allotted 1,20,000. And if I'm doing the bigger table, some applications are rejected and the money will be refunded immediately. Remember that. Then they've told remaining applications being refused, like I just concluded. T, to whom 4,800 shares have been allotted, failed to pay allotment and first call money. So this shareholder by name T, he's been allotted 4,800 shares. He did not apply for 4,000 shares. He has been allotted 4,800 shares. People who applied for 1,44,000 shares have been allotted 1,20,000. If T has been allotted 4,800, how many shares do you think he applied for? 4,800 into 1,44,000 divided by 1,20,000. That comes to 5,760. So Mr. T is a person who applied for 5,760 shares. He was allotted 4,800 shares. And this Mr. T failed to pay allotment and call money. So he paid application money. He failed to pay allotment money. He failed to pay call money. And final call, I don't think we did. And his shares have been forfeited. We did not do final call. It's not that he has not paid. We have not done final call. against T. Even before the final call is made, we forfeited the shares. Then we have the information regarding another shareholder. After the second and final call has been made, N, to whom 6,000 shares have been forfeited, had also failed to pay 2 calls. So there is another shareholder by name N. He failed to pay both the calls. He failed to pay first call. He failed to pay final call. So with regard to N, we have received application and allotment, but we have not received first and final call. So Mr. T shares are forfeited after first call before making the final call. Mr. N shares are forfeited after making the final call. And Mr. T was allotted 4,800 shares. So we guess that he would have applied for 5,760. Mr. N, 6,000 shares have been allotted. So Mr. N, 6,000 shares have been allotted. So can I say 6,000 into 1,44,000 divided by 1,20,000 makes him to be the person who has applied for 7,200 shares. I'll repeat, we have received applications for 1,80,000, but we are allotting only 1,20,000. So out of 1,80,000 applications, I rejected 36,000 applications. I am left with 1,44,000. To this 1,44,000 applicants, proportionately I allotted 1,20,000 shares. Among them are two people, Mr. T and Mr. N. Mr. T had applied for 5,760 shares. He was allotted 4,800 shares. Mr. N had applied for 7,200 shares. He was allotted 6,000 shares. Mr. T did not pay allotment and first call money. His shares were forfeited before final call. Mr. N paid application and allotment money but failed to pay first call and final call money. His shares were forfeited after final call. And his shares were forfeited. Subsequently, out of this, shares were reissued to somebody else. But that part we'll see later. Let's not worry about it. So others have paid everything. Others have paid everything. There's no problem. So how many shares have others applied for? 144 minus 5,760 minus 7,200. That gives me 1,31,040. And 1,20,000 minus 4,800 minus 6,000. That gives me 1,09,200. I hope you all got it. Now we'll do another detailed table telling at which stage how much have we collected, how much is in advance, how much is in arrears. And now using all of that together, we can close our journal entries. Let's begin. At the application stage, number of applications received. Rejected applications are 36 and they paid application money of 2 per share. So on rejected applications, I have received 36,000 into 272. From T, I have received 5,760 applications into 2 rupees. That comes to 11,520. From Mr. N, I have received 7,200 applications into 2, which is 14,400. Others have given me 1,31,040 applications, paying 2 rupees each, which comes to 2,62,080. Everything put together, like how they had mentioned in the question, I have received 1,80,000 applications into 2, which brings it up to 3,60,000. Out of this, some money is refunded because the applications are rejected. What is that? That is this 72,000. It's completely rejected and refunded. And to Mr. T, Mr. N and others, some money is adjusted towards application. Though Mr. T applied for 5,760 shares, I have allotted him only 4,800. So I can keep 4,800 into 2, 9,600 rupees in my application. He paid 11,520. Among that, 9,600 is towards application. Excess is calls in advance, transferred to allotment stage. I'll transfer it to allotment stage. That is 11,520 minus 9,600, which comes to 1,920. With regard to Mr. N, he had applied for 7,200 shares and paid 2 rupees each, coming to 14,400. I did not accept all his 7,200 applications. I've accepted only 6,000 applications. 6,000 into 2 comes to 12,000. So out of 14,400, 12,000 rupees is kept towards application. Balance of or 2,400, which is 14,400 minus 12,000. That 2,400 will be transferred to calls in advance. And coming to others, they have applied for 131,040 applications, but I have accepted 1,09,200 applications. So out of 2,62,080 what they paid, 2,18,400 is taken to application. 262,80 minus 218,400, 43,680 will be transferred to calls in advance. We can keep the totals also because when we are writing journal entries, this is what we need. We don't need this internal numbers. Then let's go to allotment stage. How much amount is receivable on allotment? On allotment, I'm supposed to call 5 rupees from each of them. 3 rupees towards allotment and 2 rupees towards premium. So rejected applications I will not call anyway. From Mr. T, I will call 4,800 into 5, coming to 24,000. From Mr. N, I will ask 6,000 into 5, 30,000. And others, I will ask 1,09,200 into 5, which is 5,46,000. Everything together, I am asking those 1,20,000 into 5, which is coming to 6 lakh. And I won't receive this full money in cash. Why? I have some calls in advance. How much calls in advance? T 1,920, N 2,400, and others 43,680. Together 48,000. I'll only collect the balance money. When I went to collect the balance money, Mr. T did not pay. So 24,000 minus 11,920 became calls in arrears. However, Mr. N politely paid that much money was received in cash. 30,000 minus 2,400. And others also paid money politely in cash. That's 5,46,000 minus 43,680. Together, there is calls in arrears of 22,080 now, and there is amount received in cash at allotment stage to the extent of 5,29,920. Once we're done with the allotment stage, let's now go to call stage. At call stage, how much money am I supposed to collect from each of them? From rejected applications, I will not ask for anything. From Mr. T, I expect 4,800 shares which are allotted to him into first call money of rupees 2. So same thing actually. 4,800 into 2, and here 6,000 into 2, here 1,09,000 into 2. So I am expecting 9,600 from T, 12,000 from N, and 2,18,400 from others. Put together 2,40,000. That is 1,20,000 allotted shares into 2 rupees per, 1,20,000 allotted shares into 2 rupees per first call. And what happens here? Again, Mr. T doesn't pay. It will become calls in arrears. But Mr. N pays politely. This is first call. Oh, first call. So this guy also doesn't pay. Mr. N also doesn't pay. 12,000. And others pay politely. So I'll write the totals here. By this, we are done with call stage. I'll take you to second and final call. And in final call, Mr. T, his shares have been already forfeited. So I will not make the call only. Mr. N, I'll still make the call. 6,000 shares into 3 rupees per share. Others, I'll make the call. 1,09,200 into 3. I'll write the numbers and total here. And what happens in this stage is Mr. N doesn't pay. So it will become calls in arrears to the extent of 18,000. And others definitely pay. So 3,27,600 will be actually received in cash. Now I have the table for application allotment, first call and final call stage with me. Using this, I can comfortably pass the entries. I can do forfeiture entry also, but to identify the profit or loss on reissue of forfeited shares, I might have to do one more note. I will do that slightly later. For now, I'll start with passing journal entries. At first, when I receive applications, the journal entry that I would pass is bank account debit to equity share application account. I have received applications to the extent of 1,80,000 into 2. I'll write 3,60,000. And if you observe our working note, I have done the same thing. See, amount received on application 3,60,000. In this 3,60,000, we refund 72,000. So 72,000 will be credited to bank account. 2,40,000 will be transferred to share capital. 48,000 will be transferred to calls in advance, which is a liability to company. So first entry is bank to share application 3,60,000. Next entry is share application account debit 3,60,000, to bank account 72,000, to share capital account 2,40,000, to calls in advance 48. So once you do this working note, journal entries becomes very comfortable. If you want, I would suggest you to pause a moment here and write down this working note and then discuss, then see the journal entries. Fine, let me write the entry. I'm taking this application money of 3,60,000. A part of it will be transferred to share capital, that is to the extent applications are accepted, 1,20,000 into 2. And a part of it will be transferred to calls in advance, and a part of it will be rejected and refunded 72,000. I hope you all understood this. It's taken straight out of our working. After this, I'll go to allotment stage. At allotment stage, entry is share allotment account debit to share capital. I'll further collect security premium also in this stage. 1,20,000 into 5, 6 lakh is here. 1,20,000 into 3, 3,60,000 into 2, 2,40,000. That is receivable. Next, when I'm receiving, I'm not receiving full money. See, allotment stage, how much money is collected? See, bank account debit to share allotment is 6 lakh. Sorry, share allotment account debit to share capital, share allotment account debit 6 lakh to share capital part amount and then security premium part amount. When I receive 5 lakh 29,920, I will debit cash account by 529,920 and previously calls in advance what was created as a liability, I will reverse it. So I'll debit 48,000 calls in advance. I have not received money. Calls in arrears will become my asset. I'll debit 22,080 and credit will be share allotment account by 6 lakh. So bank account debit, calls in advance account debit, calls in arrears account debit to share allotment. Bank account debit, money received is 5,29,920. Calls in advance account debit 48,000. Calls in arrears account debit 22,080 to share allotment account 6 lakh. So this is the entry. Or money received from others and 10 for the money which was previously received calls in advance adjusted now for the money which is not received. So allotment stage done. There is forfeiture happening of Mr. T but not after allotment but after call. Now we'll make the call. Share call account debit to share capital account. This entry will be to the extent of the money called receivable on call 2 lakh 40. So I would write this entry for 2 lakh 40, 2 lakh 40. Now when I receive the money, entry will be bank account debit, but some money I will not receive. That will be returned to calls in arrears and there is no calls in advance any longer. I'll credit share first call by 2 lakh 40. How much will I receive and how much is in arrears? Observe the working note at the call stage. We receive 2 lakh 18,400. We don't receive 21,600. So 2 lakh 18,400 will be debited to cash account. 21,600 will be debited to calls in advance, calls in arrears. Have a look. Bank account 2,18,400, calls in arrears 21,600. We're done with first call. Now before I go to final call, I am forfeiting shares of Mr. T. So I'll debit share capital account because his capital will decrease. How many shares had we allotted to Mr. T? To T, I had allotted 5,760 shares. That would decrease. So I would do 5,760 into, sorry, 5,760 had applied. We had allotted him 4,800 shares. 4,800 shares into 7 because the final call 3 is not yet done. And after I debit equity share capital, I had previously debited security premium also on this. That also I am supposed to reverse. I'll reverse that 2 rupees premium on this because it's not received 9,600. And whatever calls in arrears I had previously recorded as an asset will no longer be my asset. I will credit it and I'll also credit share forfeiture. How much money had I previously collected from Mr. T, which is how much money is still arrears from T? Arrears from T is 22,080 at allotment stage and 9,600 from call stage. Mr. T owed me 22,080 rupees in allotment stage and 9,600 at call stage. So 22,080 plus 9,600 together is the calls in arrears, which I'll reverse here. And share forfeiture account is the balancing figure. Whatever money is not given is the balancing figure. 31,680 is, we get it like this. 22,080 what he owed us at allotment stage and 9,600 what he owed us at first call stage. Understood? Yes, shares are forfeited. Now let's go to final call. Final call, when you make the entry is equity share final call account debit to equity share capital. We are not making call for all the shares. Mr. T shares are already forfeited. So out of 1,20,000 shares, I will deduct Mr. T shares of 4,800 and only for the balance I'll make the call. Anyways, I've done the working note. At final call stage, I'm supposed to collect 3,45,600. I would write the same 345,600, 3,45,600, 3,45,600. I will receive some money. I will not receive some money and totally share final call receivable is 345,600. How much is received, how much is not received? In the final stage, I'll receive 3,27,600 and 18,000 will turn out to be calls in arrears. I'll debit cash account or a bank account by 327,600. I'll debit calls in arrears by 18,000. Observe. 327,600, 18,000. Together it is 345,600. Now I will not spare Mr. N also. I'll forfeit his shares also. Share capital account debit. How many shares were allotted to Mr. N? To Mr. N I had allotted 6,000 shares. It is fully called up. 6,000 into 10, 60,000. Premium is to be collected at allotment stage. Mr. N has paid premium. He has only failed to pay first call and final call. So now when I reverse, I would have to credit calls in arrears to the money that he owes me. He owes me 2 rupees and 3 rupees. 2 rupees first call, 3 rupees final call. 6,000 into 3, that will be, no, wait. 3 plus 2, 5. 6,000 into 5, 30,000. And balance money has already paid me, politely 30. 30 is paid, 30 is not paid. If you want, I can show it to you from the working note also. If you see N column, calls in arrears come here, 12,000. Calls in arrears, 18,000. 12 plus 18, 30. So he's paid 30, he has not paid 30. Now I forfeited his shares finally. Now I'm reissuing all the shares. All the shares? His shares were also forfeited. Subsequently, out of this, 7,800 shares have been reissued. Entirely from T. Very good. So I forfeited 4,800 from T and 7,000, no, 6,000. I forfeited 4,800 shares from T, 6,000 from N. Together I have 10,800 shares. Out of 10,800, I am reissuing only 7,800 shares. And those were reissued at 8. I am collecting only 8 rupees. 7,800 shares into 8. I am collecting 62,400. But I am saying that the shares are fully paid up. 7,800 into 10 comes to 78,000. Difference of 15,600 will actually become share forfeiture. That is profit on forfeiture of shares. And we are supposed to recognize the profit or loss on this. I'll tell you how to recognize profit or loss. It's not very tricky. We just have to remember that we can't do it share wise, but we should just do it in total. The money which was previously collected from the shareholders like R and T and N is the money that is there in share forfeiture. Two ways to arrive at it. When I forfeited shares from T, I got 11,520 to share forfeiture. When I forfeited shares from N, I got 30,000 to share forfeiture. Can I say together I have 41,520? I would write here 41,520. I can show it to you how do we get that as well. Mr. T had paid us some money which we did not refund on forfeiture, 11,520. And Mr. N has paid some money which will not return to him on his forfeiture, 30,000. So that 11,520 and 30,000, 41,520 is the balance in share forfeiture account. Some of it is used for reissue of forfeited shares at discount. How much was used? We just now wrote the entry. 2 rupees is the discount per share. And we have reissued 7,800 shares. 7,800 into 2, 15,600 has been utilized. So I will take 15,600 here. I cannot say entire balance amount will be transferred to capital reserve. No, because we have forfeited 4,800 shares from T and 6,000 shares from N. Together I have 10,800 shares. Out of them, only 7,800 shares have been reissued. Balance 3,000 shares which are not reissued, against that balance has to be there in share forfeiture. And they've told complete T share of 4,800 shares have been reissued. So out of 6,000 shares which were forfeited from N, 3 are reissued, 3 are still kept. So against those 3 shares, how much money had I collected? Mr. T had 4,800, Mr. N had 6,000, totally I forfeited 10,800, reissue is 4,800, in that 4,800 is of T, 3,000 is of N. From N I forfeited 6,000 shares, in that 3,000 reissued, balance 3,000 is there, no? Against each of that, I had collected application money and allotment money. He has only not paid first and final call, 3 and 2, 5. Out of 10 rupees, if he has not paid 5, he has paid 5, no? That 5 balance should be retained there only. So 6,000 minus 3,000, 3,000 shares into rupees 5 per share. 6,000 shares minus 3,000 shares. Oops. 3,000 into 5. 15,000 has to be there. Maintained. So then I'll find the balancing figure. 10,920. This is the profit on reissue of forfeited shares to be transferred to capital reserve. I would write the entry as share forfeiture account debit 10,920 to capital reserve 10,920. By this, we are done with accounting for forfeiture, reissue of shares with pro rata, calls in advance and calls in arrears. I'll anyways send this, I'll ping this link to this PDF in the description. We can take that down and then see it in detail if you would want to. Let's now solve the last question from our September 2025 examination paper of CA Foundation Accounting. Question 6b. This is on valuation of inventories. From the following particulars, ascertain the value of inventory as on 31st of March 2025. They want us to find the closing balance of the inventory. And this information, there is a little bit of goods sent on return or approval basis. There is one special item sold at differential profit. I can use the formula, but I find the ledger simpler. So I'll draw a trading account to help you understand this. We're trying to find the value of inventory on 31st of March 25. Remember that. Let's begin. So inventory as on 1st of April 2024, opening stock 1,76,900. In my trading account, I would write debit side to opening stock 1,76,900 rupees. And then I have with me purchases. How much of the goods have I purchased? 9,64,000. This would also appear in the trading account on the debit side. Purchases 9,64,000. Then I have with me manufacturing expenses 1,90,000. This I would consider to be directly attributable to inventory. I would write it in my trading account debit side. Actually, this has to be written in manufacturing account. But here, because we are not preparing manufacturing account, I am writing that expense in trading. It is adding to the value of inventory. And any of these nonsense selling expenses, administration expenses, financial expenses, this will add. This will not be added to the cost of the inventory. Instead, this will be written to P&L account debit side, because these expenses are not directly attributable to the cost of inventory. Then we have with us sales. Sales is to the extent of 15,37,000. In trading account on the credit side, I'll write sales as 1537. And if in case I write my closing stock, I'll get GP as balance and figure. If I write GP, I'll get closing stock as balance and figure. They want us to find closing stock. They've given some information about profitability. Look at this. Sales is 15,37,000. I would write total sales as 15,37,000 here. They would have given some profitability. Some items are sold at different profit. Other items have sold at normal profit. When I identify the profit and then write it here as my gross profit, I'll total the debit, write it on the credit and find my closing stock as balancing figure. Let's see what is the profitability. At the time of valuing inventory as on 31st of March 2024, sum of 7,500 was written off a particular item. 31st of March 2024 is last year. Last year they have written off 7,500 against one item. We don't care. In the balance, which was originally purchased for 70. All that we need to know is some item when they had purchased it was 70,000 and they've already written off 7,500 against this item. Out of 70,000, when they write off 7,500, can I say the value will be 62,500? Let's write that. There is one special item. It is abnormal sales. That is the sales at a differential profit margin, or special item is also fine. Original cost is 70 and previous year they've already written off 7,500. Can I say the revised cost of it is 62,500? This item is now sold. Sale price is 65,000. So this item is now sold for 65. If 62,500 cost of item is sold at 65,000, I will say the profit is 2,500. This is on that special item. Other items are usually sold at what profit? Barring this transaction, the gross profit is 20% on sales. So all other sales from 15,37,000 other than this special item of 65, usually the profit margin is 20% on sales. So I am about to write normal sales to 15,37,000 minus 65,000 and multiply by 20%. I would get some profit here. I would add that profit with this right here and find closing stock as balancing figure. But I've been given one more line of information. 15th March 2025, goods of the sale value 20,000 are included in above sales, were sent on return or approval basis. These 20,000 rupees, which is recorded as sales on 15th March, are not sales only. Yeah, entity is saying Nino sale Allah. This is only transfer of inventory. Possession is transferred. Sale has not happened. So what should we do? 20,000 should be deducted from our sales. It is not sales. Approval basis 20,000. It is not sales. It should be added back to sales. Can I say my sales now is actually 15,37,000 minus 65,000 special item minus 20,000. If I do, Can I say my sale genuinely for the year comes to 14,52,000? And this 20 is not sales only. I will deduct it and I'll make my sales 15,17,000. Because the 20,000, the substance over form says that you have only transferred possession and you're still the owner. So it should not be considered as sales. What is sales is 15,17,000. In that 15,17,000, for 65,000 sales, 2,500 profit. For the balance 14,52,000 sales, the profit is 20%, which is 2,90,400. The total profit is 2,500 plus 2,90,400. I would write here GP 2,500 plus 2,90,400, making it to 2,500 plus 2,90,400, 2,92,900. Now I'll take the total on the debit, write it to the credit, deduct it from 15,17,000. I'll end up with closing stock of 1,06,800, which is the correct answer. Don't try to do a lot of formula, kits, COGS, all of that nonsense. Simple. Trading account any day is a savior. Prepare a sweet and cute trading account and you have it all with you. I hope you people enjoyed watching this video as much as I loved solving this September 25 paper. One of the off the hook paper which I would not personally call difficult or personally call out of syllabus, but a very interesting and unique level paper where the institute's message is quite clear that I don't want you to do any analysis of past papers or expect a specific trend or specific type of questions in the exam and come. I want you to know the concepts very clearly because I want a very talented and then qualified students sitting here in CA intermediate class from foundation route and not randomly expecting something, playing some bluff game and then passing foundation to go to CA inter. And the intention of doing this video is, now we all know that the examination is no longer 2 times a year but 3 times a year. You will have very less time left with you after your result before the next attempt. So if in case the result that you are expecting is not what you are going to get, I want you to start very early. When you saw this video, just try to recall whether you had got the similar answer or not, evaluate and then write down the marks to know whether you are going to pass this examination or not. Not to start celebrating and not to distribute sweets, but if in case you are expecting to do well and then pass, why are you wasting your time? Start with CA intermediate right away. There are so many free resources available. There are so many topics which are from foundation which will come in inter. Start preparing, start brushing up those topics, start making your basics strong and start mentally making yourself ready for CA intermediate. If in case the marks that you are expecting after looking at these answers is not what will take you to CA intermediate, don't waste. Start preparing for your next term of CA foundation examinations immediately so that what happens in September 25 remains in September 25. When you come out in Jan 2026 to write your CA foundation examination, you come out victorious with really high marks and maybe in fact with an all India rank. That's what was the entire intention of this detailed solution and not just a simple review or analysis of the paper. I hope I was able to add some value to you in this entire discussion. Please do reach out to me if in case you do need any help at any sort, maybe to buy classes, maybe to get some revision, maybe you want a specific topic to be discussed on YouTube. Your suggestions are most welcome and always available at just a message. That's what I can say. Remember, life is not a battle to be struggling, but it's a game to be enjoyed. Till the time you're learning something, you're having fun, it's all good. The day you guys stop learning something, you're stop having fun, trust me, you might start struggling because you might be in a battle. So thumb rule to stay happy is pretty simple, it's to stay in the game. So for one last time on this day, I have just one simple question for all of you. Are we in the game? I hope you remain in the game. See you all next time. Till then, stay in the game.